I'm here with Gino.
Hey, Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Feeling like Pac. Represent on my block. Try to knock me down, but I come up on top. Yeah, they wanna see me flop. Got a plot, want a lot. I won't stop on my pops. Got so many flows, it's insane. They don't really understand the game. Got a plan and it's plain, I ain't playing. I'm just trying to game. I wanna get that big bag, need that big racks. Blow up Tic Tac with a blue cheese at. I don't give a fuck about your feedback. Eat that, get back, sit back, watch me spit that kickback. Got so many flows, yeah, they think that I'm insane. Ghetto kids in a lot of pain, all about the bills, ain't shit changed. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game, I'm a player. If you a hater, I don't hate you. I'm just really happy that I ain't you. I just wanna thank you. You kept me motivated, so now I motivate you. There's a lot of cake, money on my mind like a banker. Coming through with them bangers, ain't no room for mistakes. Lot of stake, hustle till we get a lot of rooms, lot of stakes. Good kid, but I keep it gangsta. All gas, no brakes. Got cash for the case. More cash in the case. More cash in the safe. More cash on the way. Hustling all day. Ay. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player.
Danger, coming with the bang. Where my fucking baby.
Said I'm taking big shots, just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. They been trying to get me cheap like a thrift shop, but I told them it's my time, shit the wristwatch. They been talking way before they even doing something. Whoa. If they wanna play, let's get a tip off. Ain't no silver lining, dawg, this some rose gold. Getting new money, I'm a old soul. Yeah, I get it bouncing like a pogo. Whoa. And I'm too cold like Frozone. And my chick elastic, girl. Told them we ain't in the faking, this ain't plastic, girl. Bought a new whip and cash, now my taxi thorough. Way I'm shooting like step, but my pass is bro. The way I'm playing the field, I'm in a league of my own. And now they all in they fields, I got them all on my phone. But dog, I'm hitting the climb, I got no time on the low. Way I'm shooting is messy, the way I'm hitting the goals. I'm taking big shots, just stop. Way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. I just left, but you know I'm coming back though. And you know I don't play by my rags though. Now go and turn it up to the max, whoa. Send a paper to me now like a fax, whoa. Got 2 phones ringing off the hook now. When I'm in the city, I get looks now. I was going bad, but I'm good now. Said I had to go and put my foot down. Told them I'ma get it and go. Even in the summer, man, they knowing I'm cold. I got a couple checks coming that I made out the flows. Might get a couple more popping if I do it some more. I gotta do it for real. Said I'm back in my bag. All my digits are climbing just like they all on a dash. And they tell me slow down, cause dog, I'm moving too fast. Might go and cop me a Tesla, cause dog, I still got a gas. Said I'm taking big shots, just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 fight. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah. At the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah. At the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go. On the road, here we go, here we go.
What is going on, everybody? Welcome back to another Frankie Candles live stream. Bitcoin getting the dump here, guys. We're going to cover the live price action here, and we lost our key level from yesterday, and yeah, got a bit of a waterfall, some puking candles to the downside. What is coming next? Are we about to get the bigger breakdown? Are we going to be able to get some kind of a bounce? Can we reclaim the value area low? Is a new high still in store? A lot of the stuff that we looked at, guys, looks like it's going to play out over the long term here, but I'm going to break down the price action for you guys. We'll talk about some of the short trades. We are short from 98K, guys, as well as about 91K. So, yeah, those are paying out pretty nicely right now. So we'll talk about the trades as well. And, yeah, good Lord. Hold me. Oh, my God, we're dumping. But the Mafia makes money whether price goes up or down. We got the black coffee here. We're live for another early live stream. Will it be 5 hours? We'll find out. We'll find out, guys. Shout out to the Mafia. Welcome in. Thank you guys for hanging out with us here. We got Servando Estrada in the chat. What is going on? We got Jay Ford E-Dog. What is up? And, hey, shout out to, who said it? Shout out to Jay Millman said, Frankie, Frankie the freaking man. I'm on the right side of the trade. Then this little bounce, I bought SPX, hit the 15-minute resistance, sold most for 20%. I'm in the green. Thank you, sir. I love seeing the Mafia learning from these live streams and making money whether price goes up or down. Shout out to Jay Millman. I'm going to go ahead and post that, pin it for you, brother. Shout out to you, man. Congratulations. Where we at? Where's the pin button? Oh, there it is. But yeah, guys, we got a lot to talk about today. We're going to go over the long term. We'll go over the short term. I'll show you the local levels, the macro levels. Talk about that weekly money flow crossing into the red. Obviously, a massive bearish high time frame signal. And, yeah, we'll try to figure out what's coming next here for Bitcoin. And hopefully we could keep it as close and accurate as they have been in the past. We got BTC Bill in the chat. What is going on, Bill? Welcome in, brother. Bears in control, short from 90K. Let's go. I love it. I love it. Who's short in the chat? Got stopped out of my scalp long, or not my scalp long, but my local long from yesterday. In profit, luckily. Not a lot of profit, but got stopped out. Got a little bit of green there. But obviously the short's continuing to pay us. Inverse alt season. Oh, my God. Yeah, it does seem like there is an inverse alt season going on as well. But, guys, we got a lot to look at here on the chart. So, without further ado, let's go ahead and jump on into the charts. Let's get into it. All right, guys. So, here we are. I want to talk about kind of how we got to where we are and, obviously, where we're going to be looking next. Let me go ahead and I'm going to take some of these local levels off. Bada boom. So obviously, guys, yesterday we were watching the live price action here during FOMC. I'm actually going to start here on the medium time. We'll do the top-down analysis. We'll start here on the weekly. Now, last week, if you guys tuned in, you will know we were looking at that weekly money flow crossover into the red, and we were anticipating that red dot to come in here on the weekly for a couple of different reasons, right? Obviously, these money flow crossovers on the weekly do not happen very often. This is actually only the fourth one we've had since the inception of Bitcoin. Every single weekly money flow crossover has indicated a big capitulation coming, and we're going to talk about if we're going to be able to see that come in as we tap into our last resort level of support, which is that 786. But obviously, these weekly money flow crossovers, guys, have all been followed by bigger capitulations to the downside. I think everybody kind of knows my longer-term thought process there. We've kind of been stuck in this situation of trying to figure out if we could get that bigger retracement to break the highs before coming down, or if we were just going to kind of melt down from here. And I kind of want to talk about that a little bit further today. Is the higher high still in store? We saw that money flow crossing into the green on the daily, talking about how, the possibility of this being a fake out. Obviously not taking that as the base case, but kind of comparing that back to 2021, where you get that money flow crossover into the green. You get a little continuation up. Obviously does keep the door open for a new high, but when we are in a bear market scenario, if we are going to see the bear market continue, I think everybody kind of knows my longer term sentiment there. But if we are in a bear market scenario, the money flow likes to spend a lot more time in the red, and you kind of spend a little bit of a shorter amount of time in the green. So, not necessarily calling for a fake out there, but understanding that if this did fake out back into the red, it wouldn't be super surprising, right? And we also kind of had this daily money flow. This was one of the only things that was looking somewhat good, right? We were at support, which we've now lost at the value area low with the money flow in the green. But when we looked at the 16-hour, right, money flow was trending out. 12-hour money flow trending out. The money flow is going to keep you on the right side of those trades. Shout out to Jay Millman. But these weekly money flow crossovers, when we see that red dot potentially coming in, not only could that indicate a drop to the downside, but it's also in confluence with the money flow crossover, which, of course, like I said, has always indicated a bigger capitulation to the downside, like almost picture perfectly, especially in the context that we're in right now, below the 50-week moving average, lose the 100-week, big drop to the downside, money flow crossover. 50-week, can't get above it, lose the 100-week, which is not on the chart right now. I'll actually pull this up for you really quickly, right? Lose the 100-week, money flow crosses into the red, big capitulation. Below the 50-week, lose the 100-week, money flow crosses over, big capitulation. And when we see that red dot, we're like, well, hey, if we're going to see that big drop, this red dot is going to be something to look for, right? And here we are, right? So, I had that one kind of signal on the daily. But, of course, right, like I always say, you want to weigh the evidence pieces, right? Take the bullish case, the bearish case, list the evidence, and then obviously the one with the longer list is going to be the higher probability scenario. Is there a chance we can get saved here? Well, if you guys have been watching the channel, you will know that, there's the 100-week. Oh, man. I hate talking about this, guys. Sorry, I just ate a Nature Valley soft bake bar. So, but the obviously red dot now printing on the daily money flow, looking like it wants to fake out into the red here. And, of course, right, like the warning signs are here. We try to talk about them. I talk about how much I hate talking about them. But, of course, there's a reason why we held the short from $98,000, the short from $91,000 in anticipation of getting the bigger continuation down. So if you learn anything take the money flow analysis, take the market cipher B analysis, the idea of the continuations of the trend, and just see, even if it's not what you want, obviously it is going to be the higher probability scenario. Just one time frame like the daily coming into the green is not going to necessarily invalidate that weekly money flow crossing into the red. And obviously the point of these live streams is to be educational, and shout out to Jay Mills or Jay Millman and many of the other people that, take this information and are able to use it, incorporate it into their trading plan, and make money. If you take anything away from this, just understand that money flow indicates the overall trend, whether you want that to be the case or not. I obviously didn't want that to be the case, but I understand it's the higher probability. So we're kind of just seeing all this stuff come, materialize, right? So not only did we have the red dot on the weekly, but we also had that 10-hour money flow crossover, which is a market cipher B 1/16 strategy. You have the high time frame red dot and the lower time frame money flow crossover, often indicating the continuation of the trend. What do we get? Low high, low high, lower low, lower high, lower low. Right? Where does the lower high come in at? Well, we knew that we had these local levels of support, right? Here's our overall volume profile. That first major level of resistance is going to be the golden pocket 786 retracement. We also had a weekly MPOC in here, a daily MPOC in here, so we had confluence. We knew that this is an area that we can break, that we could get the lower high in at, right? Or at least see some kind of a rejection. And obviously FOMC volatility yesterday gave us a little bit of a pop to the upside, but of course we just wind up getting stuck under that 786 and getting the big dump. So I kind of just wanted to go over this and just show you guys, right? Like, when you look for this stuff to happen, the higher probabilities are way more high probability, of course, right? And then obviously we had this POC as our next target to the upside if we were able to continue. But hyper locally, when we were looking at the live price action, looking at the live price action yesterday, we had our major key level of support, which of course, when we look at this local trend to the upside, right, we start to build value a little bit higher, and that was kind of the scenario we wanted to remain in, which pretty much meant that we did not want to lose this value area high at about $88,466. This was kind of the local level of support. You had the value area low, of course, of our upper local range. We had the value area high here, and then we were also looking at our Fibonacci retracement, and we talk about where's that line in the sand that we do not want to lose, right? It's okay. It's okay to come down to the value area low. We kind of retested this wick, got a bounce during FOMC, but, you get the bounce. This is the level yesterday that we did not want to lose, because if we get accepted below this 786 value area high, you have to anticipate the rotation through the profile, which, of course, you can see we did end up getting. If I draw this as a volume profile, right? Like, why is that the level we don't want to lose, right? Well, it just comes down to the volume profile analysis. Not only are you losing the 786, which is what you would want to hold for a higher low to continue up, right? Getting back inside your upper profile for the continuation. But once you lose that 786, it invalidates the higher low, and you're getting accepted into your lower value. And what happens? You get stuck in, back to the POC, back to the low, and of course, that ended up being a very key level because we get the bigger drop to the downside. So very nice, right? Like, I don't want to say very nice, right? Not that I want price to go down, but pretty technical, right? Like, we know that's the key level. If we lose it, we're looking for lower prices, and here we are, right? You had all the warning signs on the higher time frames, the weekly. The only thing that was kind of standing by itself there was that daily time frame. So you kind of scratch your head, like, would it be surprising if it fakes out? And here we are. Now, of course, I was in that long position, did get stopped out in small profit there. Of course, protecting myself on the way up, taking profit, moving that stop loss to break even, and oh no, we lost the trade, but you still make money. And of course, it was looked at as more of a hedge because, still holding the short from here and here. I think I have these open. So here is the short that we took. When was this? Took this on the 23rd, now up almost $5,000. Got some profit locked in there. Small profit, just wanted to cover those fees. Got about almost $5,000 unrealized. And then, of course, still have the short from about $98,000 open. Literally short from the tippy top. Not only short from the tippy top, but, if you miss those positions and you know where to look for those, retracement entries, which is, of course, is just going to be golden pocket retracements with confluence. Of course, with money flow coming out. When that money flow comes out, the downtrend is likely to continue. You get the drop to the downside, you find those key levels, you look to take the other short. That's where this one, other ones from here, obviously this one from the tippy top, almost 97,438, almost 98K. But I had profits. I think I have like about $1,500 or $1,000 locked in on this one. Still got 53 unrealized. So not too shabby, guys. Making money whether price goes up or down. And it doesn't look like this 786 wants to hold, at least as of right now. So I just kind of wanted to go over how we got to where we are, because I think it's important to understand that, because if you understand these strategies, you understand the analysis, you understand what we look for, there's going to be situations like this that present themselves all the time, whether it's to the upside or the downside. And of course, like I said, this is an educational live stream, and I want to help you guys and teach you kind of how we're able to do this, right? Not just come up here and be like, look at this, we're geniuses, right? I want to show you exactly how we can do it, or how you can do it. I'm not special. It took me a long time to learn this and master it, but obviously, it's something anybody can do. So what comes next, right? Are we actually going to get the big drop down? Can we reclaim the 786? Is the thought process of potentially coming up above this high still open? I would say for me personally, I obviously have to lean more bearish, as I have on the longer time frames, but medium time frame, right? Kind of that one thing that we've been looking at is now getting very close to invalidating, which is the money flow in the green, which of course, as I mentioned, is not super shocking, right? Because if we wind up getting a huge dump down, we wind up seeing the bear market continue, right? I think a lot of people are not accepting that this could be a bear market, whether it's a 75% correction, maybe we just go down to 70K. I'm not going to get into that today, but you're not really going to be able to confirm that until you wind up seeing the bigger drop down, and you're going to look and you'll be like, oh, that was a bear market scenario. So it's not shocking to see that money flow faked out into the green, or kind of gave us spent less time in the green, didn't give us one of these nice big green waves for an overall continuation up. And this was also based off of timing of the cycles, right? Not the only thing that it's based off of, but of course, right, things are situational, and context is very important, right? Weekly money flow crossover into the red indicates that eventually we're going to come take that low at $80,500, right? And I'll go locally. We'll try to come up with some kind of case that, if I see something that maybe we can come back up, and, maybe we'll talk about something like that. But obviously, I remain more bearishly biased here for an eventual bigger breakdown. And when we talked about if we see this bigger breakdown, what are the levels underneath us? And when we take a look at this from a horizontal support perspective, right, not looking at the ranges, which are obviously important, right? This range is definitely important. However, and we also had our key level of support down here. We had a daily MPOC, a weekly MPOC, we had a daily MPOC, a daily horizontal, and the value area low. But what happens, right? This is why I don't set limit orders. You come down here, right? And there's no reason to take a long here, right? You just melt right through the level. Now, if we had come down there, maybe got a bounce, deviated, got some bull divs, something like that, saw some entry triggers, right? Then you can look for the long. But of course, right, you just melt right through it, right? This is why I do not set limit orders. If I don't see the confirmation, I don't want to get into the trade, because the continuation down is probably more likely. So when we talk about if we lose this, right, what are those key levels underneath us? Well, very simply put, guys, this was the support, right? That's in confluence with your value area low. That's the major support, daily MPOC, value area low. And the only other thing really underneath us was this 786. And we're starting to, obviously play around with this right now. At this moment, not looking like we want to reclaim this just yet. But do I love this level? Not necessarily. Does it mean you can't bounce? No. I mean, we could get a bounce here, but when you look at this from a horizontal support perspective, right, once we lose these supports, I'll take them off the chart because we just ran through them, right, there's not a lot of support down here. The only thing that you have is that 786, and it's not nothing, right? But what I like to see is an area with multiple levels of confluence, right? Why did I like this golden pocket 786 for a rejection? Well, we had a daily MPOC, we had a weekly MPOC, we had the golden pocket retracement, and we also had an anchored VWAP sitting here as well, right, just to kind of show you guys all those levels of confluence. Anchored VWAP, right? I think I deleted the, weekly MPOC, daily. I think we had a daily MPOC here that I deleted, right? So you have 1, 2, 3, then you have the golden pocket. You find these clusters of confluence, right? You see those clusters are where you're likely to get the rejections from, right? They have a higher probability of a reaction. So when I look at this, where do we have support underneath us? We have a one-tick daily naked point of control at about $81,987. Not a ton of confluence, right? I'm just going to take this off the chart for now. We'll pull up our weekly MPOCs, pull up our weekly levels. Where's our next area of confluence, right? Well, most of our resistance confluence is above, right? Or, most of the other, just confluence in general from the horizontal perspective is above us. Where's the next confluent area of support? It's all the way down here below the low at 80,500, right? So, I don't love that we don't have a lot of confluence on this 786. If we had weekly MPOCs, major levels here, and again, it doesn't mean that level can't hold. It's just, again, a probability thing. So, do I love this level? Not really. If we wanted to hold, these were the levels that I would really prefer to hold because we actually have confluence down there. So this was kind of like an honorable mention level. And of course, with the fib pulled from the full move here, this is the last level to bounce off of. Once we lose this, we don't really have anything below us until we get down to this next area of confluence. And we've covered this many a times. I always talk about how, like, I hate to be repetitive. I know, it's just like we've been looking at the same levels here within the range. It's like super, super frustrating just sit here and talk about all the same levels, which is why my preference was to just rip the Band-Aid off and get the dump. And, maybe we're on our way to doing that right now. But when we just look at this, right, we have the 786 here, right? But all the confluence is down here. And then all the other confluence is above us. So, of course, money flow coming out, etc. But this is going to be the next major target to the downside, guys. Looking to take out that $80,500 low. Everything we've really been talking about, we're just kind of seeing it materialize in real time here. And we'll cover the bullish case as well, although it's my less favored situation. But, this is the next level. This comes down to about, let me grab the numbers for you here, 79, call it 79,651 at the daily, down to about 78,200. You can actually drag this down to the daily at about 76,155. That's our next area of confluence. That's where, if we do continue down, and again, we do have that daily naked point of control here. It's a one-tick daily MPOC. Kind of like, you can think of it as like a lower time frame. It's not, it's a daily level, but it's a lower tick, so it's a little bit of a lower time frame. Not a lower time frame, but you can kind of think of it like that. Like a daily level is not going to be daily level is going to be stronger than like a weekly level is going to be stronger than a daily level. A daily level is going to be stronger than a 4-hour level. And when you look at the tick sizes, right? The higher the tick size, usually the stronger the level, in my opinion, right? Or in my experience, I should say. So, this is kind of another honorable mention level. It is there, but once we get down here, right, you're so close to this low, I would just much prefer to take out that low. 80,500 into the key level of support here, 79,651 to 76,155. That is what I'm going to be looking for. Until then, right, like, am I interested? And, I bring the confluence up because, when we're interested in trades, again, the confluence is very important. Now, I am in the short from 98K and 91K. I did not take this one, and the reason, I explained this when we were waiting for the setup. I wasn't as interested in this, only because I was holding my shorts from higher. I actually wound up taking the scalp long here at about 87.3. Got a little bit of a push to the upside, took profit, got stopped out in profit. But I am holding both of these, right? But still, obviously, a valid setup. We had it in the Discord. But, again, confluence. I'm just not a huge fan of this 786 because of the lack of confluence, right? And when we looked at this, I even updated the Discord earlier today, right? As we came down to that 786, and came down, approach this low, into the 786, right? At the end of the day, if we get a confirmation, right, technically it could give an entry trigger. But this is kind of where not market intuition, but like market experience comes into play. We did come down here on the lower time frames. I think even the 1 hour, right? Like 1 hour, we did get down for a potential SFP. This is something we were looking for. To look for some kind of a long position, but we get the SFP, wick below, candle closure above, but literally letting the Discord know, like, I don't love this setup. I have not taken that long. And why is that, right? Well, it's very simply because we had no bullish divergences. There's no real confluence. You got a daily red dot. It's just not a beautiful setup. It's kind of just the SFP. And at the end of the day, right, you get the SFP, you do get a bounce, right? Like SFPs are super high probability, but not every SFP is going to be created equal, right? Like when you have an SFP with beautiful confirmation, right? Like even here, I think somebody brought up in the live stream yesterday, right? What happens? This isn't even really that pretty in my opinion, but you get bearish divergences, you get the higher highs to your wicks. I like to see this on the bodies. So like not even really a super clean confirmation, but you get the higher highs on your price action, and then you get the SFP, right? So you have confluence there at least. But here it was just the SFP. You get a little bit of a bounce. I wasn't interested. What happens a few minutes later? A new low comes in, right? And so that ended up being the right decision. And, it's just at this point, right, I would say, we do have some bull divs. attempting to finally print here, right? Because again, when we see those potential bull divs, or when we see the momentum waves starting to print, or looking like they may want to print, like come on down to like a 50, come on down to like a 5 minute. Come on. There we go, right? Like when I see the momentum waves forming like this, guys, we go over this a lot. It's like you got the red dot about to print. Sure, you have the SFP, but does this look like this is going to take off? In my opinion, no. Because if that red dot prints, what's very likely to happen? This momentum wave is probably going to come down, and we could potentially print a bullish divergence. What does that mean? If we're going to print this bullish divergence with a higher low on the momentum wave, you're expecting to get the drop below the low. And this is part of the reason why I sat out of that long position, right? I'm letting the Discord know. You get the SFP, technically valid long entry trigger, right? But it's not every entry trigger is going to give a valid long setup, or at least a valid high probability big move. So what happens, right? Very shortly after, just kind of like giving the sauce here, guys. Like, why don't I do that? I see the bull dip potentially looking to print. Eventually, we get the new low to happen, right? And now we're starting to get some local bull divs down here. So, at this point, you're starting to print some potential bull divs. Do I love this? Absolutely not. Now we're, at this point, you got to now reclaim the 786. And with this being such a key level, kind of the invalidation level for the bounce, right? We lose this. We're anticipating the bigger drop down, in my opinion, eventually to take out 80,500. Maybe you get a little reaction off the daily MPOC. But, I don't see anything here that is like, oh my God, super, super bullish. Massive bounce incoming. Now, could you reclaim and get a little bit of a bounce? Yes, but my longer-term scenario or my longer-term bias would really be kind of the same, expecting lower. I was saying to the Discord earlier today, it's kind of something I'd rather be late to than early to, because at this point, right, we're below the value area low, we're below the daily MPOC, we're below the daily horizontal level, right? At this point, sure, deviation below the low. You do have some bull divs. You could come back in here. Like, this would be the bullish case. You get the bullish divergences. Like, if you get a 3 and 4 hour bull div, this was something that we were looking for as well, for a potential bigger bounce. But really where I wanted to see that happen was at the confluent level of support, which is up here, right? So I would have preferred to see something like that with the bull divs, higher lows, higher lows, lower lows for a bigger bounce. But now it's a little bit of a different context because we're below the value area. Sure, bull divs below the value area is nice, but again, we now have like that one bullish signal potentially faking out, which was that daily money flow in the red, in the green, right? Now it's starting to come out to the red, 16-hour money flow crossing into the red, 12-hour money flow looking across into the red, and again, you have that 10-hour money flow in the red with your weekly red dot. So at the end of the day, right, if we can get the bull divs to confirm here, again, it's something I would prefer to be a little bit more late to than early, right? And again, that decision earlier today wound up being the right decision, right? It's like I'm not just like FOMOing in here. We expect the bull div. We do end up taking the low. But if we did come in here, right, not only do you have to reclaim the 786, but you're going to have to come up and refight all this resistance, right? This confluent support is now going to be resistance on the way back up. So, I would really prefer to see a reclaim here in order to potentially open the door for a bigger move up. Now, of course, you're not going to get an entry at the tick bottom if you do that. But obviously it's a trade-off, right? It's like, not risk to reward, but it's more of just like a trade-off. Like, do you want to I'm not interested in just like kind of slapping into these longs, especially with a longer-term bearish bias. I'm not interested in like taking a shot. Right? Stopped out, taking a shot, stopped out, taking a shot, stopped out. I would much rather, even though I'm hedged, right, which is not a bad position to be in, but, I would be more interested if I were going to take the short here, like take a shot, get stopped out, take a shot, get stopped out, and eventually catch the move because, again, the longer term, you're trading with the longer term trend. Here, it's a different situation, right? So hopefully that makes sense. It doesn't mean that we can't bounce, doesn't mean we can't fake out back above the 786, but it's just something I would rather wait to see some kind of a sign of strength for. Again, you got some local bull divs here. We'll see if we can reclaim that 786. The 786 sits at about $84,219, right? So you don't necessarily always need to know exactly where the tick bottom is. Like, you just have to understand this is the first level to reclaim. And then if you can get the bounce there, you just still have to come up and fight now this major key resistance. Once we get back inside the value area, well, that would look a little bit better. Maybe at that point, if we have again, right, this is a 4-hour bull div, right? Like, you also can't sleep on that, right? It is, this is just information, right? If we wind up seeing that 4-hour bull div print, We still have about an hour and 14 minutes for maybe the SFP on the 4-hour to confirm as well. So we can kind of get a wick back above here, close a 4-hour candle, see that bullish divergence print. After that, what I would like to see for a bigger move up is a big push up. You got to be really careful around your resistance here. Once we get back into the value area low, that's a little bit of a better kind of sign of strength, in my opinion. You have the bull div, maybe your money flow can come back up, and then you could see at least some kind of a retracement, right? When we look at the higher time frames, if we get some kind of a retracement like this and we see that daily money flow crossing into the red, of course the thought process there would be still potential lower highs and lower lows onto our into our Fibonacci retracements. And again, I don't know where this candle is going to close, so we'll have to wait to see where we're going to pull those fibs. But you just have to fight all this resistance. And again, you don't always have to get the tick bottom. Sometimes we do, right? Like at the tick top here at about 97,500. But again, different situation, right? Like different confirmations. This was much cleaner. So just to kind of give you guys an idea, like for the bullish case, right? Bullish versus bearish case. I already went over the bearish case. The bullish case would be print these bull divs, get back above the 786, and then most importantly, reclaim this value area low. That would technically open the door to the point of control, and that wouldn't be my first target. Of course, you'd have to be aware that maybe you could see just continued lower highs and lower lows. So again, I do still lean a little bit more bearish, but it doesn't mean if we don't see the signs, I won't try to take along. The one thing that you do, one thing that doesn't look super horrible is like, of course, technically, right, this money flow looks really bearish on the 3-hour, but, technically, it could eventually trend to the upside, right? So that's what you would want to watch. I'm not saying that has to happen, but that's something you would want to watch. Even the 4-hour here, like coming back out, but like if you get the 4-hour bull div and you start getting some kind of crazy bounce here and this money flow starts cooking back up, generally, that's a trend to the upside. Right now, this wouldn't trump the weekly money flow. It wouldn't trump the daily money flow if that crosses red, but it could just indicate that you can get a little bit of a bounce. But we're not seeing that right now. I just want to give you guys some things to look for. And again, the key levels, right? Key level number one, $84,227, 786. Must reclaim that. If we don't reclaim that, bigger move to the downside, very likely incoming. If we do, right, biggest level of resistance, you got the daily here, daily, weekly MPOC, value area low, turning into now sitting as resistance. Could just get a bearish back test. We already got a bearish back test of the daily. But if you get a push back up there, right, like this sits between about 85,436 all the way up to the value area low at 86,302, right? So really that value area low is the level I would want to flip. And even when it comes to value area trades, right, oftentimes what we like to do, of course, is catch those short positions above the value area high in anticipation of filling the volume profile in full, lose the value area high, can't get out, POC, lose the POC, value area low, right? I like to look for those deviations, but again, context is very important. In a situation like this, there's two ways you could trade it, right? You could look for either try to catch the deviation, right? You'll get a much better entry, or if you don't get that entry or you don't like that entry, you can always wait for a drop back in, a reclaim of that value area, in this case, the value area high, and then you could just look for a short on the back test, shorting the value area high to POC to value area low. It's the same thing as that situation, but just if you can't catch it down here, right, which again I would say is kind of risky, you could always wait for a potential reclaim of the value area low and take the safer trade. Worse entry technically, right, but a little bit of a safer trade. So there you go. If we had, all money flow looking super, super good here, right? And like if it's all looked primed for a massive move up, I'd be interested. But we'll see. We'll see if those 4-hour bull divs can print. We'll see if we can reclaim that 786. Even like a reclaim of the 786 wouldn't be a bad idea. So what we'll do is we'll watch this 4-hour candle for the rest of the stream, and we'll see if we can reclaim that 786. That would be kind of like the first decent sign of a bigger bounce coming in. All right, let's come on into the chat. Shout out to Indian Martini, said, Frankie, save me. I've made too much money too quickly on the shorts. Oh, now my consistency is wrecked for a payout. Give me a pump to 86.5 and reduce my profit today. Shout out to Indian Martini. Kind of weird, right? Like, you have the consistency rule, so it's like almost like more profit kind of messes that up. But yeah, shout out to Indian Martini. Yeah, bro, first off, you've been asking us to send it down. What was it? Was it back down to 85.6? Was that the level you wanted? You wanted to send it back down here, but it looks like Bitcoin overshot it a little bit. But shout out to Indian Martini. Again, right, like if I were looking for shorts here, guys, would I be looking to enter a short here? No. Does that mean you can't melt down continuously? Obviously not. You could totally continue to melt down. But is this ever a place where I would look for a short? I think anyone who watches this show is going to know I'm not going to short on these big red candles. Obviously, all the previous shorts here from the top, from the lower high, and then that recent setup in the Discord from this lower high, right? So, like, we want to short on those retracements. So, we'll see what happens, Indian Martini. We'll see if we can reclaim that 786. And what did he say he wanted? He wanted send it back to 86.5. 86. Yeah, so you want the value area low. I mean, listen, if we get the bounce off the 786, right, let's just say I take a long position here, right? Let's just say I did. I'm not, right? And, hey, look, 4-hour bull divs, I want to look for the full rotation of this value area. Again, not really necessarily the situation, but, in a lot of cases that would be the situation. What would I be looking at here when I start to manage that trade? Well, I would say to myself, well, hey, if I can get back above that 786, right, a big major level of resistance, I'd be looking like, hey, the thing we want here is a reclaim of the value area low, or the thing the bulls want is the reclaim of the value area low here for a bigger push up. So this is major resistance until proven otherwise. And if we bounce around here, you do have to be careful of a potential bearish retest and a continuation down. And this would be the zone that I would look for a bearish retest, right? If we get some kind of retracement, that would be the big level to look at for a bearish retest. So for your sake, brother, hopefully we get a little bit of a bounce to get that bearish retest. You can get out in a little less profit so you don't mess up your consistency. Otherwise, you're going to have to start slamming the bigger trades to fix that percentage. Shout out to Sandra. Thank you for the super chat. I appreciate you. Frankie, 5K ladies following you. Whoop, whoop. Hey, shout out to Sandra. Are you saying there's 5,000 CandleMafia, female CandleMafia members? Is that what you're saying? 5K ladies following you. Is that true? That can't be true. I think our female subscribers, or at least people who actually put their real gender in the, I guess, YouTube settings, is 0.01%. You guys are a rare, elite division of the CandleMafia. Shout out to Sandra. Thank you for the super chat. Let me just make sure I didn't miss any other super chats. Kind of went straight into the analysis there. Shout out to Sandra again. Thank you for the super chat. Says, where is the bit on poll? Says, I'm frightened. Hold me. Shout out to Sandra. Tony D threw the poll in here. Will Bitcoin continue lower? Yes, we're going to lose support 56%. Okay, that makes sense to me. No, we will bounce back 28%, and 15%, I don't know. I like to see the I don't know at the low percentage, because hopefully if you watch this channel, you'll know the higher probability outcomes. And when we get that percentage lower and lower, it shows me that you guys are learning. So, let's see. Tony D said, yes, I ran the math. There's 5,000 female CandleMafia members. That's insane. That's way higher than I would have thought. I feel like that doesn't match I guess that's how you did the math, was you ran the percentages. Wow. What is the actual percentage, Tony? Is it actually 0.0 something? This doesn't look good, Frankie. Shout out to Rise. Yeah, not looking great. Not looking great. Let's see. Let's see. Shout out to Aziz said, Frankie, could you mention your bias instead of we should hold this like yesterday? Shout out to Aziz. Yeah, I have mentioned my bias many a times. I don't really know. And even locally there, looking at this, right? Not only my bias, right? Obviously my bias holding all of my short positions, right? Someone even said to me, aren't you worried about your short? Well, not really, right? Because number one, I have my profits locked in, stop loss at break even, right? So if it comes out and stops me out, I'll make money on that trade. But again, saying yesterday, with our key level of support that we were looking at locally, right? I was more worried about my my long getting stopped out than my shorts, right? Because my shorts had much better entries. And of course, right, sometimes I don't know. My bias has been super bearish here, medium term and long term. Only real thing is here, that is the bias, right? We have one thing pointing with the money flow in the green. But can I have a super bullish bias there? Not really, right? Because it's kind of like someone said in the chat, it's kind of on an island, right? They weren't talking about the daily, but I like that saying, right? It's the daily's kind of on an island there. So yeah, I don't know. I explained my bias very clearly. But, again, yesterday, not only the bias, but the if this, then that, right? If I want the continuation up into our next big target at the POC, right, what level do we want to hold? We want to hold this level, right, in order to see that. Once we lose that, that is the invalidation. Look for the big drop down, right? So you don't even really necessarily, sometimes the market is neutral. This wasn't the case. Well, I guess you did have some mixed signals here, but you don't even need to have the bias, right? Like your bias is just your bias. But really what's important is the key levels and, the if this, then that statement, right? You could have a really bullish bias, right? I could be super bullish here, which obviously super bullish would be, a very large stretch. But you could be super bullish here. You say, oh, my God, I'm super bullish. I have all the confidence. We're going up. But you could still have those lines in the sand, right? You could be as bullish as you want. You could have the biggest bullish bias ever. But if you understand the key levels that if lost would indicate a bigger drop down, well, guess what? Once you lose this level, now the bias becomes bearish, right? So even with a neutral bias, this was obviously the level that if lost would give a big drop down. So, and because bias is not always going to be right? Like you could just have the wrong bias. You could have the higher probability bias and the market just gets a big drop down. So, just my bias is never just, obviously it's right more often than not, but, my bias, like if I was like, oh, I'm bearishly biased here, it's not going to be as easy as just being like, oh, okay, like I'll just short, right? Because at the end of the day, that bias can be wrong. And if you don't understand the key levels, right, you bounce here, get a continuation up, right? It's not just that simple, right? But obviously my bias has been bearish here. I hate mentioning it so much because people don't want to hear it. But of course I always do. So yeah. Let's see. 4.8% females subscribed, 5.8 females contribute to total watch hours, which is 4,800-ish. That's crazy. I would not have thought that. That's kind of wild. Female CandleMafia coming in strong. I'm a female, but my YouTube gender says male. Shout out to Flash Ships. Shout out to you. That's what I figure, right? Like I think a lot of people just like click the drop downs really fast to make the account. So that's probably not the most accurate indication. Short retraces, if we get any, yeah. Shout out to Spinner Trades. That's kind of been that's a long-term bias even on bigger retracements, right? Like even if we get the bigger push up, right? Maybe we test, 105, 102K, right? Like still higher time frame bias would be lower highs and lower lows, right? And we come up with those biases on the higher time frames. Like what would my bias be here? Again, I hate to bring it back up. Just feel like a dead horse, I feel like I'm beating a dead horse. I love animals. No horses were hurt in the making of this, but this gives you that bias, right? So that's why you're interested in the shorts at those key levels. Let's see. If we get a bounce back up, where would you consider adding to a short? I'll cover some of the key local levels of resistance. Bear market confirmed. Bear market confirmed. Let's see. All right, so we'll talk about some of the key levels. Well, I would just say in general, right? Let's bring up our current range. Let me unhide the TA here. All right, if we get a retracement, right, which of course you got to reclaim that 786. Like the biggest levels I would look at. Again, it's the same thing that we looked at previously, right? It's like, hey, if we're going to be looking for key levels of resistance for lower highs and lower lows, where do we pull them from, right? And this is where we come up with these key levels for the most part, right? Well, in the value area, if you get a retracement, stay above the value area low, POC is technically open, right? But we don't ignore the local levels of resistance. And the reason we don't ignore this, right, and where would those local levels be? Well, hey, if we're going to continue an aggressive downtrend, those lower highs are likely to come in on the golden pocket 786, right? And the reason this is a valid level is because of all the confluence we had there, right? Weekly, MPOC, daily MPOC, which I deleted already. But you have all that confluence in there, anchored VWAP from the lower high. So we're going to do the same thing here, right? Just kind of educate, right? If you're looking for a high, a low, a lower high, you have a lower low. If you're looking for another aggressive lower high, this is the first place to look. Pull the fib from the high to the low, right? So technically, you could pull your fib from the high to the low. And there's multiple levels, right? This is a local fib. If, it's always an if this then that statement, right? If we break above the 786, well, the POC daily naked point of control is the next key level. Break above this, your next major Fibonacci retracement sits up here. We don't know necessarily 100% every single time if the lower high is going to come in here, the lower high is going to come in here, or the lower high is going to come in at the full fib, right? But they're all valid places to look. And technically, there was no guarantee that this had to be a lower low. Technically, you could have just got a rejection here and then came up to the bigger fib, and then that lower high comes in here, right? So the idea is when you're trading within the trend, you don't know exactly where that lower high is going to come in at, right? So like I say, you have a downtrend like this, you don't know if you're going to reject this lower high fib, right? Or if you're going to reject the fib pulled from this high, or the full fib pulled from the top of the move, right? So you kind of have all these levels that have opportunities to be lower highs. But, so how do you know which one to look for the short at? Well, of course, if you get the entry confirmation, you could take the short. But if I had this level, let's say has a ton of confluence in it, that's a really strong level. Let's say maybe this one doesn't have that much confluence. And then this one does, right? So if we come up here, I'm going to say, hey, this is a possible place with all this confluence and the fact that it's a fib. This is a place where the lower high can come in at. But let's say the lower high doesn't come in, right? Nothing, there's no guarantee that it has to come in there just because there's confluence. Obviously higher probability, but it's a game of probabilities. Let's say you get above this fib and you start pushing to the upside. Is this an important level? Yes, but there's not a lot of confluence, right? So you sit and you wait. Maybe you don't get any confirmations at this level and you continue to push up. Once you break through this fib, all right, no lower high. Maybe there's no confirmation. If it doesn't get respected, that's not where the lower high is going to come in. Wait for the next one. Is there a confirmation? If so, you could take a stab at the short, right? If not, you wait for the higher level. So you just kind of have to have these levels on your chart, know where to look, and then see if you get the confirmation. See if the charts are calling for the rejection at that level, right? If you melt, like right here, this was an area of interest. This is the place to look for a long. But when you come down to this level, there is zero reaction, right? So obviously, that's not where the bounce is going to come in. So you look down to the next level, which technically is the 786. We push down there. You even get an SFP, but it doesn't look good. Doesn't look like the bounce is going to come in there. No trade. Wait for lower, right? Sometimes knowing how to avoid the bad trades is just as important as finding the good trades. So when we talk about these levels, right, what would I just generally pull up as the big levels of resistance? We could pull the full fib, and again, this will move if we continue down, right? If this low comes lower, we're going to have to move that fib. But of course, this would be the biggest full fib, right? If we get a big bounce, we get back above the value area low, golden pocket, 786, right? This could be, like if it was super clean, that would be where you would look, right? Full fib from the top to the bottom. This sits between 87.6 and 88.895. Do you have to come up here? No. You can reject the local retracements, right? So you can pull from the lower high to the low. Here's your first fib, right? So once we get up here, so how do you do this, right? Like, oh my God, there's so many levels. You start with the local fibs, right? Pull from the lower high to the low. If we get a retracement, again, into these support levels that are now resistance, right? Well, now that golden pocket 786 is backing it up. This is the first biggest level, right? We got to push in here. Started getting bearish confirmations, right? This could be the place that you get the lower high. Just like back here. Where could the lower highs come in here? Well, technically, you could pull the local fib. And look, you hit your head, you come down. You hit your head, you come down. 786, wick up, come back down. You get the resistance there, right? But it wasn't where the lower high came in. So once you break above this level and you continue up, where's the next level to look at, right? Well, you're going to look at the full fib from the high to the low. That's where the lower high comes in. So you just have to mark the levels out and analyze the price as it pushes into the level, right? If you have no confirmation, and sometimes you will have confirmation, it'll just run through it, right? Maybe you just get stopped out. But you set the levels, analyze it, right? What is going on here, right? This takes time to learn. Like, there's no one on YouTube that could just jump up here and be like, I'm bearish, just short it, right? It takes a long time to learn, but that's kind of how you do it, right? No reaction here. If we get above this, the next place to look would be the full fib. And again, confluence can kind of help you understand where to just sit out, right? Like, even if you get local rejections, you don't have to short every fib and just wait for one to give you the rejection, right? When I see that this full retracement has confluence on a weekly MPOC, a daily MPOC, an anchored VWAP, you have a ton of confluence in there, that's really the trap that I'm waiting for, right? You want to set your trap in the market. Traps are comprised of multiple levels, right? If you come here, right, if you have a daily, weekly MPOC, maybe a weekly horizontal anchored VO5. If you have 5 levels in this Fibonacci retracement, that's the stronger level. So maybe you just, you're just saying, hey, like, I don't really care what happens here because this is the bigger level anyway. So, and then maybe you get the rejection here and you miss the trade, right? That's just the reality of trading. So I would say, in this case, first fib, I mean, technically, you could pull these to your heart's desire. We can go down to the 1 minute and say, this fib can reject, right? But of course, you want like a significant retracement. If the significant retracement doesn't come in, right? If this is the big fib that you're looking for and you don't get that retracement and you just come down locally, right? We just melt down from here. That's okay. People are like, but what happens if we don't get that retracement? Like, I'm going to miss the trade. That's okay, right? You're not going to catch every single trade. And if you try to catch every single trade, you're going to chop up your account. You're going to lose money. You're not going to make money like that. So, for me, and again, that's the importance of shorting when you have the retracements into the big key levels, right? Retracements into the big key levels. My personal shorts are from here and here. The last 3 shorts in the Discord were from here, here, and here. So if we just melted, if I was waiting for a retracement into here for a bearish back test to add to my short, and we don't get that and we just melt down from here, that's fine. If I'm waiting for this retracement to take a short because I didn't short any of the other pumps because I was getting bullish when we were pushing up and I was afraid to short because I didn't understand the context, well, if it melts down from here, I missed that trade, right? If I was not short from any of these levels and we just melted down here, right, it's just, and I don't get that retracement, it's just like, well, I should have been shorting up at these highs, right? If I wasn't, then it's not a bad thing, right? It's just like, oh, I missed the trade. That's fine. I'll catch the next one. Does that make sense? So I would say key levels here. Let me just see something here. Yeah, I mean, you got pretty much, I'll take this off. This is important, right? 85,364 up to the value area low at 86,290. This is the major support we had below that is now resistance. So the zone kind of starts there. But from a Fibonacci perspective, this would be the first kind of major lower high retracement sitting between 87,269 and 86,333. And then the full fib brings you closer to this, right? Between 87,698 and 88,867. All right, so those are the 2 big fibs that I would look at. Again, if we dump again, these levels will move. But of course, now let's look at this, right? Let me take these levels because technically they're tapped, but I'm going to keep them on the chart because they can be used as a resistance flip, meaning support breaks, flips into resistance, comes down. So when I look at this just from a volume profile perspective, right, this has confluence. I like that, right? This is going to be like kind of the biggest major level. Again, I can't promise you that you're even going to reclaim the 786, but if we did, this is the first major level to look at, right? Come up, bearishly retest the value area low, can't break in, new low to come. So that would be level number 1. And then if we break into I could take this off as well. If we break back into the profile, right, and we break above this 786, I would just simply pull the full retracement, right, which comes up here. And then at that point, right, you just have to be aware that if you catch any shorts up here, you just got to be careful that you don't flip that value area low support to continue up. But at that point, right, again, if you're shorting when you're supposed to be shorting, right, which is on the retracement pushing up, and you enter here, you'll have a almost 3% push to the downside. That's plenty to move your stop loss to break even and take some profit, putting you in a position where even if that doesn't play out, let's say you enter right on the 786, you get a nice entry. You understand this is now key support, right? You got to be aware. Your bias can be lower. That's fine. But, probably going to want to be like maybe locking in some profit on the test of this value area low in case of a situation like this. Even if it's higher probability to drop, right? You want to pay yourself, move your stop loss, and then guess what? You can then move to a lower target. Right? If it dumps with what you expect, beautiful, you continue to make money. If it fakes you out and gives you what you don't expect, you get stopped out and you still make money, right? Literally the only way to get into a guaranteed winning trade. So those would be like the 2 major Fibonacci's, right? Pulled from the lower high and then the full high. Once we break above this, 786, right? Well, once you break and hold this, right? The anticipation could be taking out that high, targeting the POC, right? It's just how the volume profiles work. At that point, it's kind of like a failed auction. So that would be the local resistance currently. So there you go. Let's see here. Shout out to NS. Thank you for the super chat. Said got stopped out of my short by $100 yesterday. Watching this is painful. Shout out to NS, brother. I feel your pain, man. I feel your pain. If there's one, there was like a while ago. There was a streak that I went on, which I still. Now I've come back. But there was a streak where, to be honest, I would move my stop loss a little bit too early. I was a little too aggressive on moving the stop loss because I would enter a trade. I would have to go to bed. And I would just move my stop loss to break even because I just wanted to protect myself, and then price would just wick up, stop me out, and then dump, or wick down, stop me out, and then rip. And I was on like a 10 for 10 getting stopped out right before the continuation of the move because I just too aggressive on moving my stop loss. But don't feel bad, brother. I mean, the last thing I would ever recommend is chasing the move, and just feel that, right? Like, that's painful. This is kind of how the market tricks people, and this is kind of how the market makes 90% of traders fail is you'll be in a situation like that. You feel that pain. That's totally fine. That's totally human. I feel those emotions as well. The trick is not acting on those emotions, right? This is bringing me back to like when I first started trading and I was a horrible trader. It's get stopped out. Price continues to dump. Oh my God, I'm missing out. Totally normal. You're not going to be able to avoid those emotions. That's it. I'm just going to jump in and short it. I don't want to miss anymore. And then it gets the retracement. You get wrecked on the way up. Don't get stuck on the wrong side of that ping pong, but also don't feel bad that you feel that emotion, bro, because that is unavoidable. We're humans. We are emotional creatures. I think some people can kind of remove the emotion. I think at this point, I'm kind of muted to a lot of the emotion, but there's still times where if I miss a move or I get stopped out before the move continues, I 100% feel that pain. The key and the thing that made a big difference for me was I think trying to remove the emotion can only happen with experience, but it's also, I think, a senseless goal. I think it's a senseless task because it's so innate. But the goal is to figure out how to control the emotion even when it's there. Not control the emotion, be disciplined and control your decisions during that emotion. Don't let that emotion dictate your decisions, which is very difficult to do when trading. I've made those mistakes as well. I just make the emotional decision, and I've pretty much never ended up happy that I did it, right? Like more often than not, I make an emotional decision. I'm like, why'd I do that again? I got wrecked. And, there'd be some times where I'm like, oh my God, I'm just going to FOMO in and I get into profit. I'm like, oh, cool, right? Maybe 1 out of 10 times. But of course, that's not a profitable management strategy long-term. But shout out to NS. Don't feel too bad, bro. Guess what? If you miss this move, surely it's painful, but you'll be able to catch the new one, right? Maybe you can catch the long or just wait for the back test and catch the short, right? Even with the short from 98K, of course, not everybody catches this, right? But that's why we have the next entries that we look for, right? If we short here, right, maybe someone, doesn't catch it. I'll be like, well, hey, if you're not in the short, this is probably the next place to look, right? If we get the big drop down, retracement, enter, now you can catch the bigger move. And even here, right, I was saying to the Discord, right, like you have to trade your own plan, right? My Discord is not a signals group. We put the preset setups, what I'm looking for the confirmations. And but for me personally, right, for this trade, I wasn't necessarily super interested in taking this personally because I was already heavily hedged on my shorts, right? Like I was already short from here, already short from here. I maybe would have been interested in taking this if I got stopped out of my original short from 91K, around 91K, but I didn't get stopped out, right? If I did, maybe I would have taken another short. But here, just kind of telling them, right, like this is totally a valid setup. This is what I'd be looking for. Watch these levels, etc. But I'm not personally looking to take that because I'm already holding my shorts from higher. But if you do not have a short, if you're one of those people that is stuck in a situation where you missed this short, maybe you missed this short, this would be your next opportunity to look for the short and then send it down. So there's always another opportunity, right? If you miss the move from here to here, that's okay. Don't FOMO. Don't FOMO short on the red candles, right? Wait for the retracement. Find the key levels, the high probability areas for lower highs and lower lows. Look for it there. Lower high, lower low. I missed this one. Oh my God, I'm missing the whole short. That's okay. Wait for the retracement. Is your context still the same? Are you still looking for potential lower highs? Look for that high confluence area to look for the lower high, and you'll have another opportunity to enter. And sometimes you won't, right? Sometimes you'll just dump, like in this case, if you don't take the short here, there was no opportunity unless you just wanted to FOMO, which technically, if you FOMO'd here, even shorted support, you technically would have been in profit, but that's going to be 9 out of 10 times. That's going to put you in a position where it doesn't work, right? And you FOMO in on the red candle and get wrecked. FOMO in on the red candle, get wrecked, right? So you just always want to just be patient. The faucet is always running. I tell this to the premium all the time as well. The faucet is always running. You don't always need to catch all the water, right? You want to wait for the perfect temperature, right? The faucet is always on. Let's say you want hot water. That faucet is running hot. Here's your bucket, right? I want the hot water, right? But you're sleeping. You miss this hot water, right? Whatever the situation is. Maybe, your stop loss gets hit or whatever. Like, let's just say you're sleeping and you miss all that hot water. Oh, man, I missed the hot water. You're not going to try to catch the end of that hot water if it's going to turn cold soon, right? So what are you going to do? The faucet's always on. Oh, I missed that hot water, but eventually this water is going to get hot again, right? The money fountain is always on, but you don't just always want to catch all the money, right? Or catch all the water necessarily, right? You want to wait. It's like waves. You don't want to. There's probably a better example. I think the faucet example is a little bit weird, but at the end of the day, right? The faucet's always on. There's always opportunity. Again, miss this short, you could even catch a local retracement here. Miss that short, you can catch a local long. Miss the long, you can catch the short entry, right? The faucet's always on, right? Like, I've never looked back long term and been like, I can't believe I missed that trade. Oh my God, my life is over, right? Never, right? Sure, I feel the pain momentarily. Let's just, for example, let's just say not the case, right? But like, let's just say I missed the long down here at 85K. I did catch it, right? But let's just say I missed this long at 85K. Oh my God. Like, there's another opportunity, right? I don't want to FOMO in at the top. I want to wait for the retracement. And again, it takes skill. It takes learning, right? And that's why we're here. Where is the higher low likely to come in at? Where is there an error? Like, is the trend likely to continue up? If so, then great. I'm looking for higher lows. Now I say, where is the higher low likely to pop in at? Probably here. You could wait for the retracement and then take the long again on the reclaim of the value area low for the continuation up through the profile, which obviously is super high probability. So sure, you missed this, but that's okay. The faucet's always on. I don't want to catch a long here if the water's going to get hot. I want the cold water for a long, right? So I let the water go hot. My bias is that the cold water is going to come in again and we're going to make a new high. So I will wait for that water to get cold again or wait for it to turn hot, find the area where it's likely to turn cold again, and then jump in. It's waves, right? Like, you don't, when the waves are choppy, right? And this is a little bit of a different example, but like, let's say there's a wave coming in like this. Like, you want to catch this nice curly tube, right? And that's what you want to surf. Let's say this wave goes by and you didn't jump in on that wave. Do I want to like chase that wave when the water behind that wave is super choppy and unpredictable, right? I'm not going to get a good wave. I'm not going to get a good ride here. So what do? I sit over here and I float on my board until inevitably the next wave comes. And then I catch that wave, right? These two waves, or this wave and this chop, winds up moving forward. Now there's another nice wave. This is the one. Now I can jump in on that wave and I can surf that one in, right? But what happens if I miss that wave too? I'm still not going to jump in on the chop because guess what? This wave's going to move away too, and eventually there's going to be another wave. That's how you want to think about the opportunities in trading. Like, if you miss the opportunity, it's okay. You just might have to sit on the side and wait for a little bit of chop to pass through. There will be another wave. It kind of feels like that is all emotional discipline, right? Those feelings are going to happen. You're going to be pissed off that you missed the wave, but inevitably there is going to be another good opportunity that comes. And in the market, those waves are the waves never stop. The water's always flowing, right? You're never just going to it's never going to be your last opportunity to take a trade. And if you start chasing the bad waves, the choppy waves, the waves that are not going to bring you far, the waves that are not clean, the good setups, if you don't wait for those, you're going to break your surfboard in the chop, and you're not going to be able to go surfing the next day. Wild analogy, but hopefully that clicks in somebody's brain. I learned through analogies, so that's kind of how I like to explain things. Shout out to CoinSpirator. Said, "What do you? Thank you for the super chat, bro." He says, "What do you mean by tick sizes on the daily?" They're not on daily levels. They're on the MPOCs, which you can't change them on TradingView. I would have to. Whoops. I would have to bring it up on Exo charts. Let me load this up, and I'll show you what I mean. But the way I would explain tick sizes is it's kind of like granularity. Like, again, if I have a 250 tick daily naked point of control, right? Like, I look at that as a stronger daily naked point of control. If I have a 1 tick daily MPOC, those are going to pop up much like, all right, let me pull up the MPOCs, right? So let me hide this. So, for example, right, I'm not going to bring up XO charts it's going to be too long to explain. But TradingView, I don't even really know what the tick size that they're using. But if you have a low tick size, you're going to have, say, a lot of daily naked points of controls, right? They're going to be it's like more granular. You're going to have much more tighter, closer levels. But if I jack up that tick size, it's kind of like going up a time frame within the daily. If I put it up to 500 ticks, those NPOCs are going to be not as. I'll show you on. It's probably going to be easier to show on XO charts because I can't change the tick size here. But essentially, it's kind of like. This is a good example, right? If I pull up a monthly time frame, you can see that there's not that many MPOCs, right? There's less monthly candles. These are very strong, though. They're far and few between, but they're very strong. I go down to the daily, there's many more daily MPOCs. If I go down to the 1 hour, I don't even know if it's going to load. There you go, right? There's a ton of MPOCs. If I go down to the 5 minute, like these are a ton, they're all over the place, right? But when you go to even the weekly, right, they're farther and fewer between. Right, you got like 4 here. So the higher the tick size, I consider that a higher, a stronger tick size, right? And typically you would up your tick size in a more volatile environment. But you can't change it on TradingView. You would have to change it in XO charts. So there's no real different setting that you can it's not like I'm getting a different. Any TradingView MPOC that I have, I just consider low tick because, again, I don't know exactly what tick size they use in TradingView, but I just know it's these there's tons of MPOCs that are on TradingView that I don't have on my higher tick sizes on XO charts, which makes me believe these are lower tick size. Darren Does Things might actually know what the tick size is on TradingView. Let me see here. Shout out to Overcomer. Shout out to you, brother. Thank you for the super chat. Looks like you missed the text in that. Or maybe you're just throwing a $2 tip to your boy. I appreciate you, bro. Shout out to It's Happening. Said can you go over what you're looking to take along? I see bull divs on the lower time frames, but you said you want to wait for a reclaim of the 786 with Confluence. I'm trying to remember the bigger picture. Yeah, well, shout out to It's Happening, right? Like, this is thank you for the super chat, bro. It's going to depend on like, to be honest, like, I would really be viewing any kind of long as a very low time frame scalp until maybe just being shocked and proven otherwise, right? But really the simple kind of way to think about it is, for me personally, there's many different ways to trade a volume profile, right? Or I wouldn't say many, but there's 2 ways to kind of enter a volume profile trade. You can either look for deviations below the low, right? In the example of our short position, deviate above the high. Look for the short entry on your confirmations, which we had here, obviously. We saw exactly what we wanted to see up here, making it a very easy trade to take. And you can see the easy trades that have a lot of confluence that aren't like, oh, but I have this pointing against me and this pointing against me. Like the ones that are just like hit the key level, confirmations are there. There was actually a couple mixed signals up there, as a matter of fact, but the confirmations were so clear for the entry. At that point, it's just like, I have the entry confirmations. I'm taking the trade. If it stops me out, it stops me out. It is what it is, right? You're going to take losses. It's the cost of doing business here when you're a trader. But 2 ways to trade a volume profile. You can wait for the deviation above the high, take an early entry, wait to go down to the value area low with the expectation of coming into the range, getting accepted back in, going to the POC, losing the POC, and going back to the low for a full volume profile rotation. In this case, you get a much better entry, right? But you can argue that it's a little riskier, right? Because the safer entry, again, 2 ways. Enter above the value area. Again, a little more risky because you're kind of trading as price goes up. But if you know how to spot the fake outs and you know good entry confirmations to look for, you'll know when it is a fake out. That's kind of how we trade. I basically am a fake out trader if I had to simplify things. It's a failed auction, right? A fake out, pretty much. So that's kind of opportunity number 1. You could take a short above the high, right? Above the value area high. This is overvalued price. If I have my confirmations, if price is overvalued here and the fair value is down here, it's like almost a mean reversion, right? Unfair price. Buyers and sellers have agreed that above this area is expensive and they sell it back into the range. When it comes down here, it's looked at as cheap. they buy it back into the range. And more often than not, you'll get the full rotation of the profile. Price is going to is attracted to fair value, right? It's expensive in here. They sell it back down to the fairest price, which is the POC. You don't get the full rotation, but you get the move to the POC, which is always going to be TP1. For the most part, right? Of course, your TPs can be different. I have different ways that I take profit too. But so that's kind of option number one. The plan for that trade is I'm going to enter high. I'm going to be careful around the value area high in case I have a flip, in case it flips into support and I get a bigger breakout. But if you know how to do the TA, you're going to have a good idea if there's going to be a big fake out and a big continuation, right? But the thought process is, let me get a good entry. By the time I get to the key support level, I'm already up 4%. I can lock in some profits, move my stop loss to break even, guaranteed risk-free trade, guaranteed winning trade. And then your plan can be, well, hey, if I get accepted into this range, I'll look for the full volume profile rotation. Highest probability is that price will go back to the POC. Once you lose the POC, highest probability is filling to the value area low. Plays out perfect, right? The second way to enter this trade, which it could be considered a little safer, right? But your entry is not going to be as good. Instead of getting an entry up here, you could wait for the drop back into the range and the retest, right? You just wait to get accepted back into the volume profile. Little bit of a safer trade because at this point, you're getting accepted back into your balance, and it's very likely that you're going to get the fill of the profile, right? And of course, a lot of stuff comes into this, right? You have to understand context. If I was coming down here with money flow crossing into the green, I'd probably be looking for a higher low and a higher high. That was not the case here. We had the 90-minute money flow very clearly trending to the downside, indicating that the trend would continue down, and that was also confluent with the daily red dot, right? And bearish divergence. So the probability here for me personally was the fact that it was very high probability this was going to fill, right? We've talked about it. We talked about it on the live stream. But just in general, you're going to get a little safer entry to wait to get into the profile. Worse entry, but considered a little bit safer, right? Because you're not trying to like catch the top, right? If you try to catch the top, sometimes you're going to get stopped out. Sometimes it's going to break out. For us personally, I can identify pretty accurately when that breakout will happen, right? If I saw that, again, if I saw this money flow coming into the green with a daily green dot printing, then I would say, hey, I should probably close the whole trade here, right? Or maybe not even short it and just wait for the retracement and take a long off the support. So there's just kind of two ways you could trade it. So when it comes to a long position, you could try to catch the deviation, right? Very similar to entering up here, right? You're going to get a much better entry if you try to catch the knife, right? But that again, like you're kind of catching a knife. If you get that, right, you're going to get a great entry. But with the kind of bearish bias here, there's a decent possibility that this can happen, right? It's the same thing. There was not a decent probability that we were going to hold support here and break out. Why? Money flow coming out on the 90-minute, daily red dot printing, right? In this case, we had, right, it's a little bit of a choppy situation. Technically, you had money flow coming into the green on the 90-minute with a daily green dot, but that got completely stepped on and faked out. Now this money flow is coming out, and you got an instant VWAP flop, green dot, immediate red dot, right? So there's just not as good as much good confluence there. Could this still play out for a full range rotation? Maybe. But again, it's a probability thing. So if you enter here, you're getting a pretty risky entry. Maybe you just bearishly retest, and you're getting a very a good entry, but it's much more risky, right? Because maybe you just continue to melt down. You're below key resistance. So there's no real sign of strength. This could be the higher probability outcome based off the money flow coming into the red, etc. The safer outcome would be to be late and not early, right? You're not going to get as good of an entry. You're not going to catch that knife, which is fine. I like to catch the knife when things are clear and clean, like up here. That's why I'm short from like 97.5. Here, I would just personally rather wait for at least a reclaim of the 786 or a reclaim of the value area low, right? Because then at least you're having a little bit of a cleaner entry, a safer entry and at least a little bit of a sign of strength. But yeah, I just have more of a bearish bias here. So two ways to enter. You can go above the high, more risky, better entry, right? You can wait for the reclaim, a little safer. You're accepted back into your value area. You have a nice tight stop loss. If you break out of here, the chance of a big drop down is very high probability, right? So hopefully that makes sense. Just two ways to enter a trade. Whoops, let me get rid of this. Bada boom, bada bing. Whoops. Bada boom, bada bing. All right, let's see. Shout out to Sandra. Thank you for the super chat. Said, loving the drawings, Frankie. You make charts fun. Shout out to Sandra. They call me a chartist. They call me that, not me. I'm not a self-proclaimed chartist. One time, does anybody remember when we drew the bikini bottom scene? It was actually low-key kind of good. Let's see. Resolution. There you go. Shout out to Neon Visual. That's actually usually how I maybe that's where you got it from, maybe, but that's how I describe like time frames, right? It's resolution, right? Weekly time frame, very pixelated, big pixels, low resolution. Go down to the 4-hour, much higher resolution. You see all the nitty-gritty stuff, all the nitty-gritty little ups and downs. Go to the 1 minute, right? That's like 4K. You can zoom into the tiniest little move and see what's going on. Perfect example. So you can think of tick sizes in the same way. Yeah, on TPOs you could change the tick size. Yeah, that's what I was saying with exo charts. Charts don't lie. Shout out to Hopium Copium. Got that dang right. Shout out to Brillo, said, still a little bit sad. I accidentally closed my full short at 96K. It's okay, though, because the short today was amazing. Yeah, shout out to Brillo. Yeah, I mean, definitely, I feel the pain, too, sometimes, right? Like, sometimes I'll miss a move, right? Or I'll get stopped out, and then the move will continue going my direction, right? That's always going to be painful. I could never sit up here and say that I don't feel the emotions, right? I totally do. I'm just very good at not acting on them. And the hard part is, I always try to explain this, right? Like, the even harder part is that if you end up, say you wind up getting, like, stopped out of your short and then it continues to play out, right? And then you don't FOMO in, which is the correct decision, price could still just dump, and you could look back and be like, I should have FOMO'd in, right? But that's a fallacy. Right, you should never FOMO in. Just because FOMOing would have, in that specific scenario, would have paid you out, there's going to be times where you don't FOMO and you're going to think you should have FOMO'd. You should never FOMO. If you FOMO, that is wrong, whether you win or lose. I've actually made videos about this where I've made decisions based off the wrong thing, right? I let emotions dictate my decision, and I even made money. I think I was up like $3,000 on a long, but the execution was terrible. I broke every single rule. I made emotional decisions. I let a past trade dictate and cause me to break my rules in the next trade. And I literally show that trade, and I'm like, this isn't good, right? I made money, awesome, right? But I broke my rules. If I made those decisions I made in that trade consistently over time, even though I made $3,000-$4,000 on that one trade, doing that consistently would lose me money over time. Just because it worked out that one time does not mean that was a good decision to break my rules and listen to my emotions, right? It's just human. Sometimes you do it, right? Sometimes you get frustrated. Sometimes you jump in. Sometimes you get FOMO, right? So there's going to be a time maybe where you jump in, you FOMO, and it pays off. That is not a strategy, right? That is luck. So you're always going to be better off not FOMOing in. And the difficult part becomes when you either FOMO in and it pays off. Now your brain thinks FOMO good, FOMO never good, FOMO bad long term, FOMO good one time, maybe 2 time, lucky time, no good long time, right? Very, very bad long time. So this is why trading psychology is so difficult, right? Because you're just like, if you don't have someone to explain that to you, like you're just battling your head. You think like, oh, I'm doing really good. I just wait for it to dump. I jump in, I get my money. And listen, if that works, right? If you can consistently make money doing that long term, well, then don't fix what ain't broken, right? But statistically, it's not a good thing. More than likely, you are going to be, right? Like even in this example recently, we got a front run of the value area low. Does that mean that I'm like, oh my God, I'm closing my shorts. I'm gonna FOMO long. We're breaking out. No, right? Absolutely not, right? I know that we front ran the key levels. I know that if you're looking for a long up here, you're too late. If you're looking for a long up here, I'm too late. I need to wait for a pullback to look for a long, right? Or I look to take the short. Sometimes you could take the long at the top and it's going to continue up, but that is not going to be profitable long term. So like that could be one of the worst things that happens in the beginning of your journey is that you make a bad decision and it happens to play out, right? There's a difference between luck and repeatable process, right? The repeatable process is I missed the long here. Just wait, right? If the high probability push into the value area low is high probability, well, wait for that. And then that's the key level you look at to potentially take a long, right? Oh my God, I'm dumping. Oh my God, I missed it. FOMO. Once in a blue moon, it's going to continue down. It's going to pay off. But probably 8 out of 10 times, you're going to be better off waiting for this, waiting for your key level, and then taking the short, right? So Just be aware of that. Very dangerous. The worst thing that can happen is that FOMO plays out, right? Because then you're going to think it works. Especially sometimes you're going on winning. When I first started trading, I would have like gambles, right? Like I'd have like a 3 winning streak. And then all of a sudden be like, I'm a genius. I'm so good, right? I just see the candles go up. I long, I make money. This is working. I made a ton of money. And then, a week later, you wonder why it doesn't work anymore, right? Because it's not a strategy. Bad FOMO, bad FOMO. Shout out to Jenny, said, here is the bounce. Show us the ebbs. Ebbs and flows, baby. Ebbs and flows. So we'll see. Let's see if we can reclaim this 786. That would be the next thing for a bigger continuation up. If you don't have a plan, strategy, entry, and exit, you're gambling. Absolutely, right? That's why when people come in here and they say, should I long or short right now? Me telling you whether to long or short right now is not going to help you. when you're acting from that stance, right? And it's okay, right? Like a beginner, I think anyone who gets into trading, they're going to think like, oh, like if this guy's doing it, right? Like he's just going to know when to hit long and short, right? Which, at face value is not the case, right? That's just not how it works, right? So when people are like, should I long or short right now? It's like you have no plan, no strategy, no idea if you're just asking someone when to long, where to long, where to short. Now that's different than understanding where the key levels are, what kind of confirmations we're looking for. That's totally different. But when it's just, do I long or short right now? It's like, well, oftentimes there's no trade for me, right? And if you don't have a plan or a strategy, of course, that is gambling, right? It's not going to be ever as easy as just going to someone and saying, should I long or short right now? I want to make money. It's like, well, are you looking at the 5 minute? Are you talking about a daily? Are you talking about a swing trade? A scalp? Like everything is contextual, right? Because I could say, even up here, right? I could say, what should I look for up here? I'd say short, right? Like there's no way I'm looking for a long up here, right? There's no way I'm looking for a long up here as I'm pushing into resistance. My long was taken down here. Why? Because we were coming down to support, right? We were pushing into the value area low with bullish confirmations. That's where I take the long. So, right, I'm not longing at the tops. So when someone says, should I long or short, right? I would say, I'm looking for a short up here. But like if they just see that as, oh, short, they're going to short, they're going to be like very upset, right? Because like they don't know, like I don't know what the context is, right? Maybe you were looking for on the 1 minute, right? If I go down to the 1 minute, I could say like, well, hey, I'm not going to short here, right? Like I'm not going to short here. I'm going to wait for a retracement and then short, right? Or I'm not going to look for, right? What are you looking for here, a long or a short? On a 1 hour time frame, I'm looking for an eventual short, right? But on a 1 minute time frame, right? If you're looking at a low enough time frame, you can look for a long here. Right, as long as you understand the overall context. Ebbs and flows, right? Market moves in waves. And it's all fractal, right? Just like the waves move on the higher time frames. Right? Wave, 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 wave. Right? Then you go into the lower time frames, wave, 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 wave. Right? Then you go into like the 1 minute time frame and it's like, oh, here's a huge range. Here's a range, right? So it's all fractal. So it depends. If you're looking for at a 1 minute time frame and I'm looking at this time frame, right? And I'm saying, hey, I'm looking for a push into the value area high, so I'm thinking it's going to go up. But you're looking at the 1 minute, and you're like, I longed and I got wrecked. What the heck happened? And that's like, well, you have no plan. You have I don't even know what time frame you're looking at. So it's very important, right? It's not that it's not that easy to answer long or short, right? With zero context. And if someone asks that question, it's very clear that they have no plan, no strategy. That is gambling. I like to teach how to make high probability moves. Feels really bad being in the green, having no idea what price is going to do next. Yeah, shout out to Jose. Someone asked me recently, what do you do when you're in the red, right? For example, my short right here, right? If I have my stop loss set, right? If I take the short, I take profit here, but I decide to hold a portion of it, right? Price comes down, it starts bouncing, right? What do I do now? Oh my God, like, what do I do? What do I do? What do I do? Right? Or even if you're in the red, right? What do? I do nothing, right? Because I have a plan. My plan for this short is that this was a lower high for a lower low. Beautiful. Is there a reason to close this short? No, because my idea here is that a lower high could come in here and continue down. I've already taken profit and moved my stop loss. So my stop loss sits here, right? Wherever it is, maybe it's at break even. I do not move this stop loss. And that's the decision I made. Doesn't mean that you can't close the whole trade here. Doesn't mean you can't close the trade early. But people ask me, what do you do at this point? Like if you don't know, like I don't know if price is going to break up and go to the high, or come down and go to the low. I might have a bias for, hey, if we lose this key level at 88.5, I'm looking for the big drop down. But I don't know until we lose that level. Sometimes if the signals are mixed, that, we might break up. And if you're in a situation where you don't really know, you might feel like, what do you do? Nothing, right? If it stops me out, I'll get stopped out in profit and my long continues to pay me out. If it continues down, I stop out of the long in profit. In this particular case, sometimes you get stopped out at a loss, but in these two cases, these would have been stopped out in profit. Long stops out in profit, and the short continues to pay out, right? So, like, what do you do, right? Like, nothing, right? I have a plan, right? You have to have the plan. If you have no plan, you are gambling, 100%. Shout out to I forgot who said that. Great, well said. Shout out to Creighton C. Thank you for the super chat. He said, did you just say no FOMO long time like me love you long time? You are me Ling, a.k.a. Fake Frankie from the Discord. Where's my Bitcoin? You say me double, me buku dollar. Love me long time. Well, I double your Bitcoin. Shout out to Creighton C. Guys, be careful of the scammers out there. Obviously, Creighton's joking. But yeah, be careful of the scammers out there, guys. I will not trade for you. I don't even do that for my family. I will not double your Bitcoin, and I will not love you long time. I got Mrs. Candles. Shout out to Creighton C. Shout out to the bedhead guy. Said, when I started waiting until price gets to the 50 EMA on the 15-minute chart before I decide to enter based on price action, at that point, he saved me from so much grief. Shout out to the bedhead guy. Let's go. And you could use anything, right? If I don't use moving averages, that's not because they don't work or they're not good, right? It's just not what I choose to look at, right? And that's totally fine. You got to find what works for you, right? Sometimes for me personally, right, why do I like trading volume profiles? It's because volume profiles, number one, they're very, they're based, right? Like, as the kids would say, they're based. They're based off volume, right? No pun intended. It is how price moves. Volume is price, right? So these levels are not random. They're very high probability. This is a very old strategy. I did not invent this strategy. It's very proven. It's one of the most profitable strategies that you can use. Obviously, my style of trading, mixing it with market cipher B, Fibonacci retracements, that's more of my style, that's more of my personal strategy. But volume profile rotations, the idea of failed auctions, the PBD-shaped volume profile strategies, failed auctions, is not something I invented. It is something that's been around a very long time. It's a proven strategy, and I choose to trade it because it makes sense in my brain, right? Sometimes people see these lines on the chart, and they think, that looks too confusing for me. I want to go trade patterns. That's totally fine, right? I have reasons I choose to trade this stuff, right? Super high probability, right? There's a reason why when we talk about the high probability fills of these profiles is that it happens a lot, right? It's not because I have some secret indicator. It's just I know the statistical higher probability is to get the bigger drop down to the value area low, even if we get a bounce here. This stops me from FOMOing. Oh my God, I'm going to miss the bounce. Holy cow, right? And at the end of the day, if I miss the bounce, I miss the bounce, right? That's one of the biggest things you can do is emotionally to separate yourself from the money. This was one of the biggest aha moments for me in trading, was emotionally separating myself from the money. I'm going to focus on the skill of making a strategy and a plan and sticking to it. Managing risk and sticking to that strategy. I don't care if I get rich in a month or 2 years. I am going to give myself a long time horizon to focus on this skill. That was the biggest aha moment for me in trading, because what that did at that moment was emotionally cut my tie to the money. That helped me not FOMO, because I don't care if I miss the move, because I'm not worried, oh my God, I missed a move. I could have made money. I don't care. I'm attached to making good decisions. I'm attached to being disciplined. I'm attached to making a plan and sticking to it, because I know that is what eventually will bring the money consistently, not jumping in, gambling, and getting lucky, right? That was the big aha moment for me, was when I broke that emotional connection to the money. The only reason you chase a trade is because you're emotionally chasing the idea of the money, right? Forget about the money. You have to emotionally separate yourself. The more emotionally attached you are to the money, the worse off you'll be, because it is affecting the actual thing that will make you profitable, which is being able to stick to a plan regardless of your emotions. Quit your job to pursue trading full-time before you're profitable is a death sentence. because now you lose a trade. Now I need to pay rent. Oh my God! Now I need to double down. Now I need to revenge trade. If I don't get another trade this week, I'm going to lose money. I'm not going to be able to pay my rent. Then what are you doing? Now you're making decisions based off emotion. You're not making decisions based off your plan or your strategy or your system. When the price comes down to the value area low and there's no bullish confirmation, you're going to take that trade anyway, praying for a bounce because you need to pay your rent. You need the opposite of that, right? So, very important. Not a lot of people tell you that. Shout out to JP said, wow, thanks, Frankie. This is my third year being a trader, and the first year I was focused on the money, and today I can say I care more about following the plan and the money, and it's so true. Yes, 100%. You chase the money. You chase the money will run from you. If your dog gets out of your house and you chase it, it is going to run from you. Right? It's like very similar. How are you going to get the dog to come to you? You need a plan. You need a strategy. Dog dumb. You smart. Plan. Strategy. Treat. Sit on floor. Come get treat. Dog comes slowly. Dog sniff treat. Dog nibble treat. Dog get close. Grab dog. Pick up. Bring inside. That's trading. Set your trap. Don't hunt. Trap. Don't chase the money after it's running away. It will run away from you. Set the trap. Wait for price to come into the trap. Find an entry trigger. Price is the dog, right? We'll just use the mousetrap example that I use all the time. The key levels with confluence are your trap. This is where I know the high probability is sitting. The mouse must come into the trap and take the bait. The mouse taking the bait is giving you an entry trigger. That is the mouse taking the bait. If the mouse, key support, if the mouse comes into the trap and doesn't take the bait, the mouse is going to run past the trap. No reason for the trade, right? But when price comes into the trap and you get some kind of an entry trigger, this one, and they're not all clean, right? But when this gives you maybe a bearish divergence with an SFP into key support, there's your entry trigger. Take a stab. The mouse has taken the bait. The mouse has taken mouse took the bait. That is how you trap, right? You sit there and you let the price come up to you, right? Let the price come down to you. And then if the price takes the bait, then you set off the trap. If the price does not take the bait, and if you're just wondering to be as specific as possible, what does it look like when the price doesn't take the bait? It looks exactly like this, right? It just runs right through it. Didn't step on the trap. It just ran right by it, right? If it came into the trap, gave you a confirmation, right? Well, there's the taking the bait, right? Maybe it's bullshit. There are many different confirmations you could look for, right? Oftentimes we have ones that we're waiting for because we could front run them. No trap, no trade. Very simple, right? Very hard, very simple though, right? Easy and simple are not the same thing. Liquidated, bad dog. Shout out to Sandra. Let's see. Weekly money flow. Shout out to Perry. Said, Frankie, weekly money flow coming out. Time for capitulation. Do you look at 80K volume profiles? What volume do you look at? So, yeah, for the bigger capitulation. And, of course, right, like, doesn't necessarily have to happen in a straight line like this. Maybe on a weekly time frame, but what do you look at the 80K volume profile? I don't know exactly what you I don't know exactly what you mean by the 80K volume profile. Shout out to Indian Martini said, man, analogy central today. Faucets and waves, mouse traps, some caveman references, philosophical Frankie. Yeah, I mean, it's how I learn, right? Like, you could try to teach me something. I'm not going to pick it up until you just, like, give me an analogy, right? From April. Yeah, so I think you're talking about this. Yeah, I mean, the simple idea would just be, right, like, it depends on how zoomed out you want to be, right? But in general, I will be looking for potential fake outs of 80,500 if we get it, right? Like it could offer bounces. But at the end of the day, if the capitulation comes in, lose these lows. I mean, you do have a little bit of support underneath you from that local profile, but at the end of the day, right, like long term, maybe get chops up, down, little retracements, whatever it is. But at the end of the day, once we lose these lows, I would say lose these lows, you're accepted into the low volume gap, right? And like that is very likely going to give you that fast drop down. Low volume, I know Perry knows this, but low volume nodes, price does not stick to this, right? High volume nodes, price sticks to. High volume nodes, price sticks to. Low volume nodes, price does not stick to, right? Price flies through these. Now, you might say, but we bounced here, right? Well, they can offer support when you tap on top of them, right? You have to get accepted inside the gap. So this is, again, a different situation, right? You have the 50-week moving average. Whoops. As support, right? So you tap into the top of the gap, you have support, right? But at this point, you don't really have anything, literally like almost nothing underneath you at all once you break these lows, right? You have a little bit of the MPOC stuff, maybe for a fake out towards like 76K, maybe you get a little bounce, right? Something like that. But once you decisively lose this level and get accepted into this gap, I would say 70 to 67K is probably the next area, right? Now, to look, if you want to go down to a local time frame, could you look at the $80,000 range? Of course. I actually think I deleted this range recently. I could just re-pull it, though. Oh, no, it's right here. So you can look at this even locally right now. Right? And very interestingly enough, if you viewed this volume profile, what would the high probability situation be? Right? A little bit wonky, just because you have a nice clean range here now. But you do have this lower value down here, right? Bounce, back in, POC, value area low. Bounce off the low, POC, value area high, rejection, back in, bounce off the POC, bounce off the POC, right? Play around, you're back in the range, you can't get back out. We're fighting this point of control, right? So, like, I mean, you could even just look at the price action from this perspective, right? At the end of the day, we could fill this volume profile, right? Maybe we bounce around, lose the POC, value area low, right? That would bring you down to 80,500. Start losing that. This is old, right? Start losing that. That's where you start to get accepted into that big low volume gap that we talked about, right? You slip the volume profile down here, but again, you have massive support underneath you holding you up. Back in, POC, value area high. Rejection, POC, value area low. Back to the high, back to the low. You lose the range. Huge support holding you up. Bounce, breakout. Here, you don't have the big support. As a matter of fact, you would be losing support very brutally, right? Big low volume gap. Could be the bigger drop down. So shout out to Perry. Yes, you could totally look at this. This would be valid. This is a valid value area. Contextually, I think, I mean, even if we look at the current range real quick, let me see something real. Yeah, like when we looked at the key levels of resistance to watch, right? We pull up the golden pocket, confluent, with your value area low, right? There's like many ways to look at price. Golden pocket 786, value area low confluence, turn off your range, right? Maybe you come back. Like I could pull up a million different ways to look at the price. Maybe this is a value area low, right? Maybe you come in, retest this. Actually, more significant, what I would look at, full fib. Look at the confluence there. If you're going to get accepted into this range, bounce around, can't get out, back to the POC, back to the low, this is huge resistance, right? It's the same levels that we looked at in the context in the beginning of the stream through the bigger profile above, right? Same fib, full Fibonacci retracement. This gives it confluence with the value area high, 87,587 all the way up to about 88,842, right? Could be a lower high before eventually getting accepted into the profile. And to be honest, right, like the high time frame is very clear, right? This money flow is very clearly trending out. Lower time frame, guys, like this is not super, right? Like this money flow is coming out again, right? But I mean, if this rolls back up, like that money flow could be coming up. But again, like higher time frame, I wouldn't say like, oh my God, this is beautiful for a massive move up, especially if you can't reclaim that 786, right? Which is confluent with this POC. I mean, this is a huge key level. And even if we reclaim this with all the resistance above, it's I just don't know how likely it is for that to be the bottom before massive move, right? But what we can do to kind of gauge that, right? You don't have to know. People are like, well, what are you going to do if you don't know, right? Well, I'm holding my shorts. My longer term bias is lower. But what you could do is say, if we do hold that 786 and we bounce, I'm not really that excited until I get above the value area low. And like even then, I don't know how excited I would be, right? But like at least you have a roadmap, right? If it is come in here, flip this to support, could technically open the door to the POC, could it technically open the door to the value area high. Just like, right, but it's not a guarantee, right? Just like down here, holding the value area low keeps the door open to the POC, but we know that we have this local level of resistance, which could give us a lower high and a lower low. So what do? We have the short set up there. Of course, I didn't personally take that one because it was already short from here, but like, it's market discretion, right? It's like a discretionary trade. Just because you're above a value area low doesn't always guarantee that you're going to get the full fill, right? So you have to understand where those local levels are. It's the same thing. It's the same thing here, right? I could say to myself, well, hey, if I reclaim the 786 and get a bounce, I want the reclaim of this value area low. Does that guarantee you're going to get the full fill of the volume profile? Not necessarily. You could reject this Fibonacci retracement, right, for a lower high and a lower low. Right, so that might not play out for a full rotation. But again, it's contextual. There's a bearish bias on the higher time frames right now. So it's kind of a difficult situation, to be honest. Especially if you don't have a lot of experience. What's your opinion on the 15-minute orb strategy? That's another strategy that is, I believe, like statistically, like decently profitable. It's not something that I've really traded by itself. But the idea of the orb, 15-minute orb strategy, maybe I'll do like a video where I like test 10 trades with the 15-minute orb trades for like 10 days in a row and see if it's profitable. But 15-minute orb is essentially at the beginning of the session. I'll just use the current price action for a you mark off the first 15-minute candle range, right? So you mark off the high and the low of the first 15-minute candle of the session. And then essentially what you do is you go down to like a 5-minute time. Now, this is not something that I trade, right? So like I'm not a 15-minute orb trader, right? So, you know, keep that in mind. But essentially the idea behind it is you mark off the high and the low of the first 15-minute candle of the day. You wait for a push above that level. And then, like for example, let me see. Let me just get like an even number, right? So let's just say, for example, just find a clean... whatever session you're trading, where are we at? Going to bar replay mode. Whoops. The heck? All right, so let's just say you wait for your first 15-minute candle to print, right? You wait for the high. You wait for the low. And then once you break out of that range, right, you mark it off as a range, which I didn't do, right? And this is just the general idea. You mark it off as a range, and you wait for a breakout, right? It's basically a breakout strategy. You go down to a lower time frame, whatever it is. You have your range. You wait for a breakout of the range. A lot of people will wait for like a breakout and a retest, which I guess in this case Yeah, like this is why I'm not really, I mean, I guess you would wait for a 5-minute candle confirmation outside or something like that. Like you would need some kind of a like legit confirmation. Again, I don't trade this, so I don't have a specific plan for this strategy. But this is essentially what you would do, right? I wish I had like a clean, actually they have orb indicators. Right, okay, so here you are. I don't know what session this is based off of, but you could see, right? Essentially what it does is it marks off the first Come on. Come on. Find one that works. With price targets. Oh, my God. I could just code this and make $1 bazillion. Okay, so try to find one that, like, is, like, makes sense. Let me just get... All right, so let's see here. So there it is, 9:30. They mark off the high and the low of the candle. And then I believe the traditional way to trade this is they go down to a 5-minute time frame. So let me come into bar replay mode so this is nice and clean. Right, there's the 15-minute range. 15-minute confirms, high and low is marked, orb low, orb high, 15-minute, right? That's actually a pretty decent indicator. I don't even know who made this. Let me get rid of this. Oh, that was the same indicator. So there it is, right? So the thought process, I believe what a lot of people do is they go down to the 5-minute, they wait for a break and a retest of the high or the low, and then they take their trade. So, again, this is not really something that I like. The thing I don't really like about this is that, I mean, I would mix this with volume and order flow to indicate if there's like a real breakout. But apparently, this I've heard this is like a statistically proven strategy. So I'll give it the benefit of the doubt. But you wait for a breakout and a 5-minute candle closure. I think a lot of people will go for. They wait for a 5-minute candle closure. They take their entry. They target, you know, whatever it is, a 1 to 3 or whatever their profit target is. And then they hope that it's on the right side of the breakout. Let's see here. All right, so that one would have been a loss. And again, I don't have an actual like strategy here, but this is honestly why I don't. And maybe statistically over time, this does wind up playing out. Just because this one lost does not mean this is bad. But like this is what I am a fake out trader, right? So like anytime we get a breakout of a key level, like this is more often where I'm looking for shorts, right? Especially if it's a volume profile. So yeah, all right. So now it's like orb low. Let's see, you can wait for a breakout, maybe a 5-minute candle closure, or maybe you can wait for a 1-minute breakout retest. And again, I'll say it again, I don't trade this strategy, right? So, like, I don't know, maybe like breakout, retest, entry. And, of course, you're going to get stopped out sometimes. So, again, this doesn't mean it's a bad strategy. It just kind of goes against my personal style of trading, right? So, I don't know. 5-minute candle confirmation. This one looks like it actually gives you the signal. So, I wonder what this is basing... I wonder what this base is, or is it the other one that gave the signal? Maybe it was the other one giving the signal. But yeah, I don't know. I think a lot of people wait for like a 5-minute candle closure, which you didn't get here, so that wouldn't have been a short. So that would have been a loss and a non-loss. Now let's see. You got a 5-minute candle closure below. And again, I don't know what the risk, I don't know. Don't trade this, but I don't know. I just go for like just see if it plays out. Yeah, I mean, I don't know, man. It just goes against the way that I trade. But again, I don't know. Maybe there's other confirmations that people look for. Maybe there's other confluences. But yeah. Or maybe they're just not looking for a big target. They just get like a little wick down. I don't know. But that's the 15-minute orb. I think most people wait for a 5-minute candle closure or a retest, and they trade the breakout. But it's just, I'm like the opposite of a breakout trader. I'm a fake out trader. So, but there you go. But I have heard it's statistically profitable. It's like one of the better strategies out there. Very simple, too. Let's see. Oh, the next 15-minute candle. Confirmation, is that the entry? I'm sure tons of people have different entry triggers. Yeah, 5-minute close with a fair value gap. Yeah, you could kind of just stack the confluences as well. Yeah, shout out to Perry, said I like the 80K range better, and I would like to get back to the value area high at 88K, golden pocket retracement to get the short again. Yeah, that's definitely a valid idea, Perry. I would totally agree with that. Shout out to Rudy in the chat. Let BTC dump into the shadows. But yeah, Rudy, I would say it's definitely a valid range. Where's it at? Am I blind? Yes, I am. So, yeah. I mean, I don't know saying that you have to go back up there, but yeah, I would say, I mean, that's a very clean from the high to the low. That would be very nice. Within the volume profile, I mean, that would definitely be a key level, whether you're looking at it from this context or this context. I honestly prefer the 80K range context. Like you said, it is cleaner, right? Like I would rather take a short at a value area high like the 80K range than take a short in here. Because you might look at this and be like, I don't know, I'm short. I don't really like to short in the middle of the range, but if it calls for it, I will. Right? Like we have the short set up here. I don't like shorting in the middle of a range, especially if it's not at the POC. But in this case, you have the confluence, right? You have the key level. So it's not impossible to dump from there. Same thing here, right? Now, maybe we have a daily MPOC down here. We'll see if it winds up printing. But we'll see what kind of confluence we have down there tomorrow. But, I mean, even if you take it in the other context, you would still, in my opinion, probably want to be careful around 86,314. But I would say that is a clean way to look at the price, for sure. Let me move this. So, we'll see. And you can see the levels respected, right? POC. Clear interaction with that POC. Let's see. Shout out to Scar Touch. He said, yeah, only 800 of us are here at the moment. You know, sentiment and interest is really low. Yeah, and that's not bad for what it's been lately, right? Because we're getting a dump. That's like higher than what we've been doing recently. Nobody cares about crypto right now. It's crazy. Social sentiment is crushed. 4-hour close below the 786. Yeah, I mean, there it is. Doesn't mean you can't reclaim. I mean, if you get this 4-hour green dot, I mean, and also yesterday, what was the thing we were looking at to anticipate if we were going to wind up seeing this bigger drop down, losing the $88,500 key level of support, which is insane. Look at this, right? And I wasn't looking at this 80K range, but this just makes so much sense. What was our key level yesterday on the scalp range here, right? We had our local value area low. Let me pull up the 30-minute real quick. On our Fibonacci retracement. And we had our local value area high. Just goes to show like how many different ways you can look at the market and it just all lines up, especially when you're looking at volume. But you know, like here's the key level of support, right? About 88,500 at the 786 was very important to hold. Once we lost that, I was anticipating a bigger drop down because we had this lower profile. And then once we lost that, right, we were looking for the bigger drop down just based off this context. But let's pull up that 80K range, right? Super clean perspective. Because where is that $88,500 786 sitting? Where is that previous value area high sitting? It is sitting right on this bigger value area high, right? So if you were looking at this 80K range, you could have even said, we had similar, and we pretty much had the same targets. The first target was down towards these lows. But you could say to yourself, if we lose this value area low and this 786, what is happening? We get accepted into the previous range. Where can we look for price to go next? Where does it go? Directly down into that POC. Pretty crazy, right? Now, we didn't have a much of a different sentiment, right? But it wasn't based off this volume profile. But you could just see how beautiful that is, right? For me, obviously, we were looking at the current range. Lose this, value area low is the first level of support at 86,280, right? But it got melted through, right? And where'd we go? Right to the 786 POC. So actually, very clean outlook there. Not a bad place. If you were looking at this volume profile to find that target, you would have ticked it. Shout out to Brillo, said, I love coming to the stream when we dump. Absolutely, brother. Absolutely. It's the beauty of being a trader. You can make money whether price goes up or down. Let's see. Moon soon, the Moon Boys screams. Shout out to Hopium. Yeah, I mean, they scream that no matter what. What range is that POC? Brillo, that is from the $80,000, like from the April lows at about $75,000. 75, 80K. Right? It's pulled from this range right here. We've also talked about, someone mentioned MicroStrategy. They didn't ask me to look at it, but they just mentioned it, which kind of just, we take a look at MicroStrategy, right? This is very similar to what we've seen in the past in 2021. The MicroStrategy kind of leads Bitcoin on the dump, right? MicroStrategy bing bongs around. We lose that upper profile. What happens? Big capitulation down to the next value area. Bounce, right? You get stuck inside the profile, lose the POC, headed down to the low. This is literally what we looked at, right? As we were playing around here back in November when we looked at this. What can we look for? If you get accepted into this range, you could eventually fill it to the low. If I pull this side by side up with Bitcoin, it's obviously they are very similar structurally. So I'll pull up like the daily, right? Very, very similar structures, obviously. But if I pull that same volume profile, right, here's your upper range, high number one, lower high. Right, it's a little clearer because you get the lower high on MicroStrategy, a clean structure. Right, you get the high, you get the lower high. The lower high comes right in on the golden pocket value area high. Bitcoin puts in the higher high, which was very similar to 2021. But if I pull this upper range, right, there's the upper range on MicroStrategy. Here's the upper range on Bitcoin. If we lose this value area, where is price likely to go next? It's likely to seek out the next area of value. There it is, right? So it's very plausible, right? And we didn't actually look at MicroStrategy because people don't really ask for it often. We didn't look at this until after it happened. And we looked at the chart. And I was like, I mean, that's exactly, it's funny because on Bitcoin, we've been talking about potentially something like this to play around in this range. And then we came to MicroStrategy and I was like, this makes a lot of sense. MicroStrategy is literally doing the exact same thing that we expect Bitcoin to do eventually long term, right? Like you can see my cursor on both sides. It's like the same exact thing, same exact ranges. So, and when we look at the past, it's been very similar in the past. And I'll even pull up the weekly so it's a little bit more like abbreviated and not as confusing. Right? If we pull up 2021, same exact thing. Right? Obviously, you don't have the clean value area to the left like we do in this current cycle. But what happens? You have MicroStrategy putting in the high and the lower high, not the full fib, but you get it into the local fib. And actually, this is over a long enough period of time where you could probably look at this on log. There you go. So you get the high, the high, the low, the lower high, the lower low for the bear market, right? What does Bitcoin do? Bitcoin puts in the high, the low, the higher high, kind of the fake out, right? Clean structure on MicroStrategy. Weekly money flow crosses into the red, bear market. Bitcoin, a little sketchier, puts in the higher high for the bearish divergence. Weekly money flow comes out, bear market, right? And these were a little bit more on time last cycle, but MicroStrategy giving the lower high, indicating that maybe this higher high was the higher high before the change of trend. Same exact thing currently. Lower high, big capitulation. Lower high, higher high, weekly bearish divergences. Like, it would make a lot of sense to see that happen. It's not just based off this. Like, it's just like one of the 50 things that just look very similar. Right? It's like MicroStrategy, literally, like when we talked about this all the way at $108,000, right? And we talk about this potentially happening. It's kind of crazy, right? Because it was like, as we were talking about that here, looking for the local profiles to fill, and then eventually, if the weekly money flow comes out, where would be like a big target to look at down here? MicroStrategy was kind of already doing it. I wish we were looking at that at the time. But I don't know. Very interesting here. Very interesting. Kind of wild. to be honest. Like, if somebody just saw the stream and saw us talking about this, but we're actually looking at MicroStrategy, they might be like, wow, that looks similar. I wonder if that's going to happen. And then it would be like, holy cow, it did happen. Right? And it's doing exactly what we would expect Bitcoin to do down here if we can make it as well. Right? Which is get accepted into the range and potentially fill it in full. Right? This would be the equivalent of Bitcoin coming down to about $59,000. Which, by the way, if that ends up being near where the bottom comes in, can't complain about that bear market. Right? I'm not saying the bottom has to come in there. I'd be interested in looking for bottoms here. And again, once we get down there, we'll know if it's going to be likely to see a much bigger move down or not, or if the bottom could come in here. But, like, I'd be so okay with that being the bottom. Like, this would be a cakewalk bear market if that's the case. Just here for the bing bongs. Shout out to Deet. D Lee. D Lee Gaming TV. Shout out to you, brother. Shout out to Yoda said, who was your TA teacher? I'm self-taught. When I was learning TA was much different, right? Or not TA was much different, but the crystal ball, shout out to Neon Visual. Yeah, that's people ask, how do you get it? Right? Like I here it is, right? But yeah, man, I wish I was learning how to trade now, and not back when I was. I used a ton of different stuff. Like there was what do you call it? Investopedia. I'll never forget, like, sitting at my kitchen table on Investopedia, taking notes, like, writing stuff down, like, terms, and, like, okay, bearish consolidation, bearish pennant. What is whatever, right? Like, writing down terms. Now there's so many other resources, way better resources now. Frankie looking for the bottom. Shout out to Dave Digital. We always love looking for the bottoms, those fat, juicy bottoms, baby. Shout out to Dave. If nothing happens with Iran, we end up seeing a pump next week. Shout out to Cigar Tat. Could we see a pump? Yeah, I mean, listen, maybe, right? Like, I'll say this time and time again. Like, I can share my opinion on the higher statistical probability, which in my opinion is lower. But I will never sit up here and tell you that there is a 100% certainty that will be the case. Obviously, high probability is not 100%. Now, again, like I've talked about this in the past, like, could this be the low? Maybe. It's not impossible. Is it high probability? No. Is this the bottom? High probability? No. Right? Could it be? Sure. Right? Anything could be possible. But when it comes to statistical higher probability, I mean, now weekly, man. And if this plays out, right? If this plays out and we wind up breaking down to the 70 to 59K range, if that plays out, weekly money flow has never been wrong. And that would be the fourth time it's never been wrong. Even if it did something like this, right? We can still put the higher high in. Technically, daily money flow is still in the green. This doesn't look good, especially with the early indications here with the 12 and 16-hour money flow coming out, likely to leak into the daily. But, technically, if we could keep that in the green, get a scam to the upside, maybe. But no, my longer term, through all the thicks and the thins, oh no. We still live? YouTube just freaked out. Are we still live? Are we good? Are we still good? I think we're good. Sentiment has remained the same since $108,000. Through all the bounces. Oh my God, what happened? I thought we were bearish. Long-term scenario. Oh my God, what happened? I thought we were bearish. I thought 94K was incoming. This guy's a clown. Doesn't change anything. All right, now 94K incoming. Or now 95K is here. Still bearish bias. Still higher time frame, right? Willing to look for bigger retracements here. Even if we get a bigger retracement or got a bigger retracement, still a bearish bias, right? But, of course, I can't say it's impossible that we bounce from here and go into an all-time high. That was possible, right? Anything is possible. Could you bounce here and go to an all-time high? Maybe. Could you bounce here and go to an all-time high? Maybe, right? Doesn't mean it's high probability. And, of course, higher probability is higher probability. So could this be the low? Maybe. I think a lot of people maybe, I don't know. I would say probably more people are hopeful than, I would say more people are hopeful for this to be the low Not that would make me make a decision based off that, but could this be the low? I'll say it like I say every time. Yeah, not impossible, not the higher probability. Like here, 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 and here. Could be possible. Still lower probability. I hope, right? Although lower probability, I hope it's the case, right? I want Bitcoin to go up just as much as the next guy. Shout out to Hopium Copium. We live, boys. Sentiment in the gutter. That is dang right. I think we're going to get that retrace in Asia session to our level. We could fade again before we hit 75K. Could be possible. Could be possible. I don't think that's a bad thing to look for. I really want to see the 50-day tapped up at 100K, but the probability is in the single digits now. Yeah, I would agree with that. Never a promised thing, right? 50-week moving. I think you mean the 50-week moving average. Never a promised thing, right? And of course, that's why I like to come up here and talk about this stuff every day. But yeah, we'll see. We'll see, guys. Time will tell. Time will tell. Fighting at 84. Yeah, fighting at the shout out. Was it Perry? Shout out to Perry. I like this context. 80-minute and 90-minute money flow back in the red. Of course, I do like to see these nice green waves crossing into the red. This is could be a fake out, for a continuation up. It is confluent with the, 2-day green dot potentially looking to print as well. I wouldn't say potentially looking to print, but VWAP coming up. I mean, you got a pretty big rejection on that VWAP as well. Yeah. I don't know. If we are in a bear market scenario, remember, just look at 2021. I mean, this is insane, guys. If this winds up getting the bigger drop down and we take out the lows, I mean, it's almost, in my opinion, a little bit freaky and maybe a little lower probability because it's just so similar to 2021. Right? It's not common that you're just going to see this stuff play out exactly as it's played out in the past. I mean, this would just be absolutely out of control if this plays out. Not only from a price action perspective, from a money flow perspective, right? It's you get the money flow crossover on the daily into the green, continuation up, but it's really just a fake out because you're in a bear market context. And we've covered this, right? You get the money flow to come out into the green. But if we wind up going in hindsight, looking back and saying, yeah, this was a bear market context, which looks very likely, has looked likely since 108K, I mean, even this would look the same, right? You spend more time in the red than in the green in bear market scenarios, right? You might say to yourself, well, look at this. If you look at money flow and just kind of back test it, nice green money flow wave, get a little bit into the red, little cool off before a higher low and a higher high. Okay, cool. Nice big green money flow wave, new high, little cool off for a higher low and a higher high. Nice big green wave, right? Back into the red, little cool off, higher low, higher high. Sure, in a bull market scenario, right? But in a bear market, you spend a lot less time in the green and a lot more time in the red. It's literally the opposite, right? You would spend a little time in the red, back in the red. I mean, little time in the green, a lot of time in the red, right? Which would look exactly, right? Massive green money flow wave, new highs. Little cool off, big money flow wave, new highs. Big red money flow wave, little fake out, not fake out, but short time in the green for a little retracement, weekly money flows coming out, lower high, big red wave, little green wave, retracement, big red wave. Then when you get your next big money flow wave in the green on the daily is not until the bottom is in and you're starting the bigger move up. Now you're going to start spending more time in the green, a little pretty choppy here to be fair. Continue up, you chop sideways. This was brutal. This was also brutal, guys. There's been some few times in the market that when I look back at the chart, I remember how brutal it was to sit through that price action. I actually remember being in a short from up here and crushing. Remember exactly where I was when this actually dumped. But anyway, right. Then eventually money flow crosses green and you start spending much more time in the green and less time in the red, or just even not as deep in the red. right? Much more time in the green, little push into the red, continuation up. So money flow behaves different in bull markets and bear markets. So that's kind of what we've been looking at as an idea of like, well, hey, if this money flow does fake out into the red, that would just be another thing that looks very close to 2021. It would be common in a bear market scenario. Very interesting. Oh God, someone is spamming like crazy. He said, I have one question. Oh, my God. But he never said the question, and then he got booted. No spam. Market Maker said, did bro expect the stream to pause and Frankie to personally ask him what his question was? Oh, God. The money flow fake out, as you call it, is actually a divergence. You could have divergences on money flow for sure. I mean, you could have divergences on kind of any kind of like oscillator like this, really. But so I wouldn't even. You can have money flow divergence. Like, let me find you a money flow divergence, right? Like, you could kind of consider this a money flow divergence. Let me pull it up on the weekly so it's a little bit more smoothed out. So yeah, whoops. So like right here, higher highs on price, lower highs on your money flow. There's a money flow divergence, right? On the daily though, it's a little bit different, right? Whoops. Like on the daily, I don't really see a money flow divergence here. I guess depending on how you define divergence, right? But like really for a divergence, what you want to see is price action doing the opposite, moving in the opposite direction as your oscillator, right? So like if I wanted to see a money flow divergence here, I would want to see like maybe this higher highs and then have a money flow wave and then a lower high on the money flow wave. But yeah, I do see what you're saying though. Like on the weekly, like here it's kind of like weekly's different though. Because that's like an actual divergence. But yeah, I get what you're saying. I wouldn't call it like a technical like this would not be a technical divergence. But something like this maybe. Let's go back to 2021. Yeah, like even this. Yeah, no, I wouldn't even really call that like this fake out here. This is not a divergence either. Right, because you would want higher highs. Like this is not diverging, right? This is not diverging with price action. It's just going in the same direction. Whereas like in a situation like this, you have an actual divergence, right? Price is diverging against money flow. One is going one way, one is going the other way. So I could see that, right? Like if you have the higher high on price action, I wouldn't really consider this a fake out on money flow. I would just consider it trending out. But if you had a fake out like that, let's just say your money flow wave did something like this. You have higher highs on price, and then you had a green money flow wave, and you come into the red, and then you fake out back into the green like that. Well, yeah, I guess that would just still be a technical divergence. But the daily, I would not consider that daily a divergence, just simply because it's not diverging. Let's see. Different Bitcoins have different weekly blood diamonds not long after the all-time high. Did you notice that? I didn't until I got Market Cipher myself. Shout out to Barillo. Yeah, different exchanges will give you different, for sure. Different exchanges will definitely give you different indications. But yeah, on the Bybit chart, and I believe the Bitstamp chart as well, you have the same blood diamonds. See Coinbase maybe. Why did I type Coinbase? Yeah, they're pretty similar, at least on the higher time frames. But I wouldn't be shocked if you were looking at a different exchange on maybe a different, what do you call it? Different Market Cipher A confirmation. Let's see. Yo, market cycles have always looked like the Quicksilver logo. Is the Quicksilver logo a wave? Big wave, little wave. Yeah. Shout out to Dave Digital Family Channel, please. Oh God, somebody's dropping somebody's dropping slurs in the chat or something. Thank you, Dave. Appreciate you, bro. I wish BTC. Oh, man, dude, my eyesight. I wish BTC can get cheaper again. I want to buy one this year. FFS. Just dump it already. I want a Lambo in 4 years. Shout out to Rudy. Let's go, baby. What is the difference between trading on the BTC USD perpetual chart and the USDT perpetual chart on Bybit? They're just different charts. The only reason, like, I would tell people to switch their. It really depends. It's kind of personal preference. I find the levels to be most accurate on Bybit USD. The way I figured that out was I would look at other charts, and my levels would consistently get front ran, and I would look at the Bybit chart, Bybit USD specifically, and they would just end up, those were the levels that were getting tapped. So I started looking at this. Some people like to look at the chart on the exchange that they're trading. Only problem is if, like, the exchange you're trading doesn't have a lot of a ton of volume, right? Like, you probably want to look where a lot of the volume's being traded. Bybit is one of those exchanges, Binance. So yeah, I just find this to be the most accurate levels. So that's why I look at it. And again, through experience of seeing levels front ran. And it's like, you know what? I'm just going to, if these keep getting hit on the Bybit chart, I'm looking at the Bybit chart. So there you go. But we'll see what happens here, guys. We got the POC getting the POC battle here. But just like yesterday, right, the 4-hour red dot was kind of the thing that we were looking at to see, if we get the 4-hour red dot and we're going to come down and lose our key level at 88,500 for the bigger drop down, that 4-hour red dot's the thing to look at. If we got the red dot, we were able to hold it, and it wound up not really being a huge dump, and we were able to get another green dot. Continuation up was more likely. Same thing here. If we're going to get, when we're looking for the move up, whether it's going to be lackluster retracement for a continuation down, or you're going to get one of the bigger Fibonacci retracements that we talked about earlier in the stream, I would look for the 4-hour green dot to be the thing to look for that some kind of rotation to the upside. For the next, ebb or flow up, that 4-hour green dot would be the thing that I'm looking at. And again, key levels of resistance if we do come down. I'm sorry, if we do get a retracement up. Let me pull up the current range. Biggest levels to look at, in my opinion, actually probably a little bit better confluence here. Or not confluence, but better perspective here. Value area high, golden pocket 786, 87,637 to 88,913. That would be your kind of biggest retracement that I would be looking for. And then locally, you could always pull it from the lower high as well, which of course is a little more confluent, not with your upper value area low, but your current range, or I'm sorry, value area high, but confluent with your current range value area low, right? So I could actually get this off the chart at this point. So these would kind of be the two major Fibonacci retracements I would look at. This one, definitely valid for a retest of the value area low before a bigger breakdown. If we can get back into the range, I would look at this one. Breaking above that 786 would indicate to me that you can get the bigger fill into the point of control. So that's what I would look at. We'll see what happens. Going to hold the shorts. I'll probably lock in some more profit here. 5,200 on the short. Look at the entry there. Perfect SFP entry on that. Blowfin up. Come on, give me 5K there. Give me 5K. Let's see. Shout out to Darren, said, some of the premium asked for the ETH chart last night. I'm working on the ETH chart. I will post that when it's ready. Shout out to Darren. USDT is ripping. Not uncommon. Like I always say, the USDT chart is basically the inverse chart of the Bitcoin chart or USDT dominance chart. Leave no money on the table, boys. Let's go. Let's go. I really hope Bitcoin will dump to 40 to 50K. We'll see. Only time will tell. Only time will tell. Frankie, you're a beast still streaming. Yeah, I'm actually going to hop off now. I actually have to get I have a meeting to get to, and it is already 3:35. I'm going to have to race in the Supra. No yelling at DDT. No, I know. I'm working on the chart. I'll drop it when it's ready. Let's see. Beautiful shipper entry, Frankie. Shout out to Shemetric. I think I said that right. Shout out to Shemetric. Let's see. Make sure I didn't miss anything here in chat. Frankie, I need the long on ETH 2787. Need the long on ETH 2787? From 2787? Or you need the long to hit 27? But yeah, I don't know exactly what that means. Let's see. I love keeping USDT dominance on my watch list. Everything will be bleeding out, and you will have no one thing in the green. It makes you feel good to see the green candles. That could have a psychological effect to it. A sniper. Did I misread sniper? If I misread sniper, I need to go to sleep. Oh, shipper, sniper. I was going to say shipper entry. What the heck is a shipper entry? I fell asleep after dinner. Shout out to Jesse. What is going on, bro? Welcome in. It's all right, Jesse. But I do have to hop out of here, guys. I am literally running late. I did not realize that it was 3:35. But, guys, thank you for tuning in. I appreciate every single one of you guys. I got to run out of here. Smash the like button on your way out, and we will see. We gave all the key levels. If you just tuned in, scrub back to the beginning of the stream, and get all the sauce on Bitcoin. We got the bigger drop down. The shorts are printing. And watch those retracement entries if we get the bounce. Reclaim that 786. And then again, that big resistance, or most important resistance, between 86,228 and 87,206. That's all the time I got for today's live stream. Shout out to Joshua Hines, GG's. Joshua Hines, big huggies. Jesse, thank you for being here. Thank you for everything you do. Dave Digital, thank you for everything you do. Darren Does Things, thank you for everything you do. And thank you for holding down the chat. You guys are the real goats. I will see you tomorrow. Hopefully not at lower prices. That's all I got. Asta pasta. Frankie Candles out. Bing bong!
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, man, we coming for the bag. Yeah, and we ain't ever going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah, maxed out, put the pedal to the floor, yeah, on the road, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah, maxed out, put the pedal to the floor. Yeah, on the road,